live. Ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with.
Welcome to NDTV Profit. You're watching Ask Profit. I'm Mahima Vachrajani and with me is Alex Matthews. Well, before we move on to the show, let's take a quick look as to how the markets are doing. Well, in terms of the Nifty 50 as well as the Sensex, it's trading almost at its day's lowest point. There you go. It's down by about 0.3 odd percent. The Nifty Bank as well as is trading in a very flat range. It's hardly up about 0.01%, but the broader markets are doing better than that of benchmark indices. The Nifty mid cap 150 is up almost 0.3%, the small cap 250 up almost 0.4%. In terms of the Nifty 50 heat map, let's pull up that and see what counters are doing well in trade today and which counters under pressure. ITC after the BAT stake sale, of course, under pressure, down by about 3 odd percent. Apollo Hospitals, Bajaj Auto, Nestle, M&M, some counters trading in red. Some counters doing well. HDFC Life up by about 1 odd percent. Jio Finance, Adani Ports, Bharti Airtel, Axis Bank, all trading within the range of that 0.5 to 0.9 odd percent. Let's also pull up the sectoral heat map and see how sectors are faring in trade today. Well, it's a range-bound trade today. So the sectors as well, there's Nifty Realty, which is up hardly 0.5%, PSU Bank up 0.5 odd percent, Nifty Energy 0.4%, Nifty FMCG definitely under pressure, and this is on the back of heavyweight ITC seeing a downtick of almost 3% in trade today. Nifty Consumption down by about 0.7 odd percent. Nifty Auto, Nifty Metal also under pressure. Let's pull up some stock-specific names and see how they are faring in trade today. And this is on the back of news plus earnings that have come post-market hours. There's DCX Systems, where cost of raw material is weighing on the overall profitability as well as margins. The stock is down 7%. Red Tape on the back of its earnings down by 5.7 odd percent. There's Stylum, JTL, Home First, Bosch, Bharat Dynamics also seeing pressure in trade today. Some counters like Techno Electric up 10% on the back of stunning numbers. Spark up 10%. Infibeam also seeing momentum in trade today, up by about 9 odd percent. Thwini Engineering also up by about 9 odd percent, and there is LIC that's also up by about 7 odd percent in trade today.
ITI is doing quite well as well. It's something that I looked at closely this morning. It's up about 6.7% or thereabouts. And interestingly, a narrowing of the loss. There was an exceptional item as well, but the EBITDA loss has narrowed on a year-on-year basis. Interesting counter to look at. It was in fact on Amar Deo's watch list heading into trade as well. Time Techno initially started off in positive territory after a pretty strong set of numbers, but it has since lost ground. And the one stock that stands out in the large cap space is ITC. In fact, let's pull that stock up. It's trading with cuts of about 3% or thereabouts. It's off the low point of the day. And interestingly, this is on account of the sale of stake by British American Tobacco. Remember, before this transaction, they had 25% stake, and they're selling stake for the requirement that they have for funds. And initially, it was expected to be an 11,600 crore stake sale by BAT, but it's ended up being 15,000 crore or thereabouts. It was an upsized deal. The details of the buyers will be known eventually over the course of the day, but that selling pressure is what you're seeing, because the price was decided at 400 rupees per share, and that was about 7% below even yesterday's closing price, and you saw the share price drop about 2% in trade yesterday. Interestingly, we've been asking experts whether or not this is an opportunity to buy ITC. The cautionary tale, of course, is that BAT after this transaction will still have upwards of 20% stake, and this overhang of supply into the market by the way of BAT selling additional stake could come through at any point over the course of the next years as well. Remember, last year they sold 3.5% stake in one of the largest transactions in the block space that India has seen, the third largest in fact. We've got Vaishali Parekh as well as Nirav Ashar joining us this morning. So let me ask that question up front. Nirav, fundamentally, nothing has changed, and very good morning to the both of you. But Nirav, nothing has fundamentally changed for ITC in terms of results. But this overhang of stake sale by the largest shareholder, which held 25% before today, and will maybe end up with more than 20% even after this transaction, it remains, right? Would you go ahead and buy based on the price correction of the last couple of days?
Good morning and thank you for the invite. I think ITC has a deep embedded value within itself. We have a lot of exposure to different kind of businesses, despite the fact that of course the hotels division is out, but I think still we have cigarettes, which is an interesting play, tobacco, agri commodities, FMCG, paper boards, etc. And from a valuation perspective, it is still quite reasonable. The performances of all these divisions have been quite decent. It's a cash flow generating machine, and I think the prospects are looking quite decent. So I think every fall should be used as an opportunity to keep accumulating in small quantities.
Just want to point out that neither the experts on our platform nor us at NDTV Profit suggest that you should consume tobacco, cigarettes or any other form of such consumables. It's bad for your health. But let's go to a new listed player on Dalal Street, Belrise Industries, which made a positive debut in an otherwise weak broader market. The shares of the auto components manufacturer listed a premium of 11% or thereabouts, lost a little ground since that point. We've spoken to Shrikant Badwe, who is the managing director, and Swastik Badwe as well, who is a promoter at Belrise Industries, about everything that you need to know. Listen in.
How your revenue split up? You're largely an auto ancillary company with roughly 60 or 65% of revenues coming from the two-wheeler space. I just want to start off first with within the two-wheeler space, what kind of products do you currently offer? And do you expect the share of two-wheelers to be around this level given the growth expected over the next couple of years?
So today, we primarily work in the two-wheeler space. We work across OEMs, so right from a Bajaj, Hero, Honda, TVS, Royal Enfield, the new age EV players. We work across the whole bunch of them. And two-wheeler really, as you said, been our bread and butter for the past 3 decades. It's where we derive a majority of our revenues from. Today, we've got 24% market share in the two-wheeler metal component space, which means that 1 in every 4 vehicles out on the road has a metal product, so a chassis or an exhaust system or a metal component made by Belrise Industries. So that's the type of market leadership that we have developed in the two-wheeler space. Going forward, two-wheeler will continue to be a focus. We are launching a few new product offerings in the space, including multiple different steering column products, including multiple different filtration products, which we think can be very interesting and can increase our content per vehicle. At the same time, we want to also focus on the four-wheeler and commercial vehicle space, where our presence today is quite small. And we would like to focus more on the four-wheeler commercial vehicle space by working with our existing OEM relationships like Jaguar Land Rover, Tata Motors, Ashok Leyland, Volvo, Mahindra, and so on and so forth.
I just want to get into a little bit more on the product side. You mentioned that you have 24% market share as of FY24 in the high precision metal component space. Now that will include chassis along with the other products. So essentially, will chassis have a higher market share for you, and while the others are still trying to get through, or do you have a stable market share with essentially 1 in every 4 vehicles having a product from Belrise?
I think it's more of a weighted average. I think in that sense, I think the market share will be quite stable for a chassis and exhaust system and other metal components. I think one thing you'd appreciate is that metal does create a large part of the bought out material in the metal space in the two-wheeler. So more or less, when we do well in the chassis, all in all, it translates into other components also. Because one thing that you'd appreciate about the two-wheeler industry is that the way we usually win business is in a basket. So we don't usually win business only for a chassis or only for an exhaust system. It's for a basket of products put together for which we quote and win a business.
Fair point, and point taken. I just want to get into the industry also, because last year in FY25, we largely saw the two-wheeler industry outperform the passenger vehicle industry by a mile in terms of growth. This year, though, we've seen over the last 3 to 4 months that especially the motorcycle segment has started to slow down a bit, and the market seems to be moving towards scooters. At least that growth momentum is continuing from the last year. For you specifically, how do you address this? Because you mentioned some of your key clients, Bajaj Auto, Hero, as well as Eicher Motors, all largely present in the motorcycle space. So how do you see the outlook essentially specifically for the motorcycle space this year in terms of growth?
See, I think we work across motorcycles and scooters. We don't have any particular liking to the one, I might say. I think motorcycle and scooters both form part of a business. So in that sense, we're quite hedged against the industry because we work across multiple different OEMs. I think even if scooters do better than motorcycles this year, we don't believe it will impact our performance materially. We feel that growth will be robust across scooters and motorcycles for us, because not only do we grow organically with the current platforms that are in the market, but we're also vying and have won quite a few new platform wins in the past few years, which will overall increase our business going forward.
Okay, so that's the management of Belrise. The stock is up and about, giving up gains, as I pointed out, from its initial uptick that it saw when it listed, uptick of 11%. It's now up as much as 4%. Now, there are several questions that have come through. I do want to remind you, if you're tuning in for the first time, you can call us on the number at the bottom of the screen, or you can send us a message on that number on the top of the screen. That's our WhatsApp number. Appreciate that you've taken the time and you're waiting by, Vaishali as well as Nirav. And we just spoke about ITC. Now, like I said, there are several questions that have come through. Let me take the first one on NALCO, National Aluminium Co. We've got Ranjana from Bengaluru, who's bought at levels of 185 and is wondering whether to hold for the short term. Vaishali, good morning. Would you do so if you bought at levels of 185?
Very good morning, all of you. Actually, yes, NALCO has been showing some strength right from the beginning of the day. So I would say it looks attractive. In my opinion, this can go towards 188, 190 also. So my view is positive.
All right, so that's with regards to where NALCO stands. The next question is from Ganesh, who wants to know as to what should be the next course of action for PG Electroplast. He's bought shares at 962 and sitting on a 19% loss. If you can see, if you can quantify his losses, let's put that up. He's also said that his investment horizon is for the next 6 months, so he wants to know whether he should hold or sell. Vaishali, I'll again come to you on this one. What are the charts indicating for PG Electroplast?
Actually, the long-term chart is pretty interesting. It's quite positive, and right now it's in a consolidation phase. And to give my view, it's currently also sitting on a 200-day moving average. So that makes it a very strong support. In my opinion, from here, this can go towards 850, 900 to start with. So I would say hold with a stop loss of 750.
Okay, so that's with regards to where PG Electroplast stands. The next question is from Venkatesh, who is writing in from Rajamundry. He is holding 6875 shares of Whirlpool at 1360 and wants to know as to what should he do. Should he continue to hold or average out? Nirav, I'll come to you on this one. Lots happening when it comes to Whirlpool. The earnings were decent this quarter, but overall in terms of the Whirlpool Corporation selling its stake in Whirlpool, what are the views like? Should he continue to hold?
I think he should exit out of Whirlpool and maybe shift to some better pedigree names like Blue Star.
All right. Okay. Now let's shift focus and take a look at the earnings update. Epack came out with its earning, and we spoke to the management earlier. Listen in.
What has led to this kind of an outperformance in terms of the numbers, and specifically the strategy with regards to your operational guidance? How has that helped to meet that 160 crore number?
So firstly, definitely last year FY25 was a fabulous year for air conditioning business. But Epack did not just grow in AC like at 50%, but all our levers around diversification, both product diversification, customer diversification, something which was well executed. So we grew 100% almost in the component business. We grew 22% in the SDA business, and then the newer introduced the large domestic appliances like coolers and all, which was introduced only last year. So 25 we saw that also increase. So we have substantially reduced our overall customer dependence on top customers from almost 72% in FY23 to 48% in FY25. So on all aspects, be it product diversification, customer diversification, all the strategies we had planned had worked very well. And this is why the asset turn also has improved for us from almost 2.6. We have achieved an asset turn of 3.2. So going forward, definitely we will keep focusing, and the strategy is to keep growing in other businesses and to keep diversifying while maintaining the pace of growth in the AC business.
Right. Ajay, one of the strategies that you've looked at is in terms of reducing your exposure or the contribution of revenue that comes in from room air conditioners to other products. From what you're looking at in terms of reducing it from 80% to 65%, where do you stand currently, and what are the product segments that you are going to introduce?
See, reducing dependence on AC does not mean we don't intend to grow. So AC will continue to grow at outpacing the market growth, but at the same time, our other business growth, whether it is the small domestic appliances, the newly introduced washing machines, and the cooler business, the component business, so all others we are focusing to grow them at double the pace or triple the pace of the AC growth. So this is how we are reducing our overall dependence on AC, and at the same time also trying to maintain a uniform business every quarter. So that's the objective the company is following right now.
Okay. No, so agreed. I'm not saying that you're not going to grow your RAC business. The question is, if the other segments also come in, where does that stand currently in terms of overall revenue share, and how margin accretive are those other segments as compared to RAC?
So last year, FY25, our overall AC contributed 74%. So we come down from almost 85% to 74% in last year. And going forward, we are guiding that we will further diversify, and AC will contribute 65%. So that's the overall guidance we have given.
Okay. And taking into consideration your capacity utilizations, where do they stand for RAC, and how much of the capacity now is being utilized for your small domestic appliances as well as the large domestic appliances for the remainder?
The good thing for us, most of our investments in capacities is into manufacturing of the parts required. So these parts can be used for AC or any other product. So all the investments except the assembly lines are fungible. So herein the focus is, like I shared earlier, is to diversify as much as possible so that the utilization during the off-peak AC season improves. So the overall objective has been to improve the utilization in the off-peak AC season, and this is why we are repeatedly saying that we will continue to focus on growing our component business, the large domestic business, and the SDA business. So while AC during the peak AC season, definitely the utilization of the assets is close to 100%, 95-90%, but it is the off-peak season or the off-peak AC period which definitely challenges us in terms of asset utilization. So this kind of strategy, we are overall, I shared earlier, from a 2.6 asset turn, we've already achieved 3.2, and going forward, we are further looking at bringing it up to 4%.
So Ajay, just to understand this correctly, one, RAC, which has been the core business, now you're looking at ramping up your RAC component portfolio as well, and that automatically looks at backward integration in terms of manufacturing. Correct me if I'm wrong anywhere on this front.
Yeah, you're absolutely right. Just to add on, so the components are not just for AC. The components are well for the other products like the washing machines or refrigerator, and the component business in terms of the PCBA controllers. So it is component for any appliances manufactured. So our focus, we are also doing component for energy meters. So our focus is to look at business which can give us substantial revenue during the off-peak AC season.
Got it. Apart from that, when you look at the domestic appliance business as a whole, inherently it's a high margin business as compared to the room air conditioner business from a margin perspective. Now that EBITDA has been at 160 odd crores this time around, when you increase your or reduce your RAC to revenues from a 80% to a 65%, how much will it actually impact your margins on a positive end? Further expansion that we could look at in terms of FY26 and 27?
Definitely, first of all, I like to again say we are not reducing the AC business. We continue to grow. At the same time, the growth in the other business is outpacing the AC growth definitely. So overall, yes, the revenue mix and the margin mix is changing. Although last year we took a dip in the margin compared to FY24. That was basically because of the low utilization of City, the new facility. So as our utilization of the other facilities and the utilization overall throughout the year improves, we will definitely looking at increasing or improving the EBITDA. So from current year 7.25, we are definitely looking at a higher 7% kind of an EBITDA for the next year.
Okay, strong set of numbers from Epack, durable and a stock to watch going into the rest of the day's trade as well. It has lost ground from the early part of the session today. We've got our first caller for the day. We've got Man Singh calling us from Andhra Pradesh. Very good morning, Mr. Singh. How can we help you today?
Good morning, sir. My query is regarding Techno Electric Engineering, sir.
Okay.
Yesterday it posted good results, sir.
Yes.
I am holding 20 shares, average price 1175. I want to know both fundamental and technical analysis and what is the entry level? Where should I start pyramiding or accumulate more shares?
Okay.
How is the future prospects?
I got your question. Nirav, if you've tracked Techno Electric, the numbers looked particularly strong. Would you hold on to this? Would you add more at this point?
Yes, I'd like to hold on to the stock because this has got exposure to the power segment and it does balance of plant assignments. And of course, the outlook for T&D space is looking quite good. Power sector investments have been on the rise. So I'd like to hold with a medium to long-term perspective.
Okay, so hold for the long term, but a quick view, Vaishali, on deploying further funds into this very sharp up move in trade today and holding at higher levels. Would you deploy?
So I would say it's open with a gap up and it's already surged quite a bit. So in my opinion, it's better to accumulate because it can go a little bit into a retracement towards 1250. That would be an ideal level. So I would say accumulate from here on.
Okay, so that's with regards to where Techno Electric stands. The next question is on Maruti. Bhupendra Mehta from Mumbai is writing in and wants to know as to what should be the next course of action. He's bought 16 shares at 11,740 levels and wants to know if he can continue to hold at the current levels. Vaishali, I'll come to you on this one. What are the charts indicating for Maruti?
So right now we are just seeing some profit booking, but I think the trend is that as long as 12,200 is held on. So continue holding with a stop loss of 12,200. And once, if the stock goes above 13,000, you're ready for a target of 13,600 and so on. So I would say hold with a stop loss.
Okay, so that's with regards to Maruti Suzuki. The next question is from Devinder, who is writing in from Hyderabad. He wants to enter into the metal space and wants to know as to which mid-cap and small-cap stocks he can enter into right now. Nirav, I'll come to you on this one. Any stocks that are looking attractive to you right now in the metal space, especially from the mid-cap and the small-cap space?
We like a couple of stocks, Nalco and Hindustan Copper. I think both of these are looking very attractive.
Any particular reason as to why you're choosing these two counters, Nirav?
Well, the valuations are very attractive. The results have been quite good. The margin trajectory has been improving. They're backwardly integrated. The demand scenario is quite good. So I think they make an interesting combination, basically.
Okay, so that's with regards to where the metal space is concerned. Next caller, Dheeraj is calling in from Hyderabad. Dheeraj, a very good morning to you. How can we help you?
Good morning, ma'am. My query is regarding Adani Green. Can we enter into Adani Green at current levels is my query, ma'am.
Okay, got your point. I'll take this up with Vaishali. Vaishali, what are the charts indicating for Adani Green?
I would say actually whole of Adani Pack is at very attractive levels and it's showing a lot of strength. So talking specifically about Adani Green, this stock has actually fallen from 2,100 and now oscillating, in a narrow range. So I guess it's a matter of time. 900 is a very prominent support and it's very close to the support level. Once we see momentum setting in, this can go towards 1,200, 1,300 to start with.
That's the view on Adani Green. Standard disclaimer here, this is part of the Adani group of companies and so is NDTV, of which NDTV Profit is a part. Vishwanta Reddy from Madanapalle is asking about high-tech pipes as well as Apollo Microsystems. Interesting, right? The entire pipe space has been in focus in the recent past and another day of run-up for high-tech pipes. So the question to you, Vaishali, would you deploy in any of these?
So yes, actually my preference would be the frontline like Astral and Supreme, etc. But I was seeing high tech since yesterday. The volume has really surged in, technically very well placed. So I would say yes, one can accumulate from here on and can see a return of around, as a trading perspective, towards 110, 115, and 95 should be the stop loss.
So that's the view with regards to where these pipe companies stand. The next question is from Saif Rahman, who's writing in from Saudi Arabia, and he's holding 163 odd shares of Tanla platforms at an average price of 793. He wants to know whether he can continue to hold or book losses at the current moment. Nirav, I'll come to you on this one. Tanla platform, what's the outlook like?
Well, Tata is looking interesting, but I think he'll have to have some patience with respect to the stock. So I think he needs to wait for a couple of quarters before we start seeing any improvement in the performance.
Wait for a couple of quarters to see improvement for Tanla platforms. With that, it's time to slip into a very short break, but we'll be right back answering all your queries on the other side. So do stay tuned.
That's huge. That is a biggie. It's on.
गोल्ड ग्लास क्लियर ग्लास पार हो या नियर सब कुछ दिखे क्लियर.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims?
Welcome back. You're watching Ask Profit, a show that gets all your stock related queries answered. For viewers who are just tuning in, a gentle reminder, you can either call us or WhatsApp us on the numbers that are flashing on your screen right now. All right, our next caller, Ravi, is calling in from Bengaluru. Ravi, a very good morning to you. How can we help you?
Yeah, very good morning. I bought 300 shares of Aether Energy at an average price of 305.
Okay.
And I think today it is trading at 320 or something like that. I just want to know the long-term perspective. I bought it immediately after the listing of the share when it took place.
Okay.
And even though I am on a little profit, I want to hold the share for more than a year.
Okay.
And EV vehicles are in. It's a big buzz
right.
today. I just want to know what is the long-term perspective of the
Got it. Got your query, Ravi. I'll take this up with Nirav. Nirav, he's talking about Aether. The stock is not really trading, it's trading pretty much near to its issue price. The issue price was 318 and it's currently trading at 321. What's the outlook like? Should he continue to hold for the next 1 year considering the EV demand in the two-wheeler space?
Yes, he'll have to hold for a decent period because this is going to be a slow burn. This company is an associate company of the Hero Group, so I think definitely the prospects seem to be quite good. But there is going to be a waiting period, so he needs to keep the patience with respect to the stock.
Waiting period for the stock along with the scooters that it sells. KPR Mill is the name of the counter we're talking about next. Anshu from Chennai is asking this question. Bought at levels of 1,150 levels. What is the outlook for the next 6 months? Vaishali, on the charts?
I guess it's already in a trend. I think the way the formation is, it's likely to show targets of 1,400, 1,500. And for this, I would say keep a stop loss of 1,100.
Okay, the next question is from Venkat, who's writing in from Andhra Pradesh. She's having 5,000 odd stocks of HDFC Life at an average price of 781 that he bought recently. He wants to know, can he hold this for 6 months or so? Vaishali, I'll again come to you on this one. What are the charts indicating for HDFC Life? This is around 6% of his overall portfolio.
Oh, wow. So I would say, of course, to that extent, I would say definitely keep a stop loss, hold it with your trailing stop loss. But seeing the chartical view, I think, it's given a breakout even on the monthly chart. So having said that, I would say that yes, now the prominent support lies at 740. And in all likelihood, if the momentum continues and the trend continues, this can go towards 900 levels also. So 900 to 1,000 levels would be the next target. But since he's already held for a long time, I think disciplined trading is a must. 740 should be the stop loss.
Okay, disciplined trading is a must, is the view coming in on something like an HDFC Life from Vaishali. Our next caller, Rohit, is calling in from Delhi. Rohit, a very good morning to you. How can we help you?
Good morning, ma'am. I am hello.
Yeah, I can hear you, Rohit. Go ahead.
Ma'am, I have 2,050 share on Natco Pharma, ma'am. Natco Pharma.
Okay.
My average price is 972.
Okay.
So I want to know about should I hold or should I add on?
Okay. Ma'am. Okay, got your query, Rohit. I'll take this up with Nirav. Nirav, Natco Pharma is the counter. What's the view like, and your view on the entire pharma space now that most of these companies have come out with their earnings?
I think with respect to Natco Pharma, he'll have to hold. The prospects look good from a medium to long-term perspective. As far as the entire pharma space is concerned, it's made a very smart turnaround. And I think we continue to like the front-liner companies like Cipla, Dr. Reddy's, Sun Pharma and Divi's Labs in particular.
That's with regards to where these pharma companies stand. The next question is from Nataraj. He's asking about Graphite India. He's holding 30 odd shares bought at 556 a piece and wants to know as to what should be the next course of action. Vaishali, I'll come to you. What are the charts indicating for something like a Graphite India, and what are the supports and resistance levels that you're observing?
So yes, the stock has shown signs of bottoming out and getting into a trend. For some time, it is only consolidating. So I think the near-term view would be that 520 is the near-term immediate support level. And once we see the stock going above 580 levels, this could go towards 620, 640. So on a broad base, 500 is a support. But for near-term, if you're looking, 520 should be the near-term support.
All right. Vindhya is calling us from Hyderabad. Vindhya, I love your name. How can we help you today?
Yeah, hello.
Hi, Vindhya. Please go ahead. How can we help you today?
Okay. I have 220 shares in Gravita at the price of 1,900. So I just want to know the future for 1 year. Can I hold it for 1 year? What is the view of
Okay.
that?
When did you buy this, Vindhya?
1 month ago.
Okay. And you bought it with the intention of a price appreciation for less than 1 year. Is that right?
Yes, correct.
Got it. Okay, Vaishali, then on the chart, she's in the green right now. Bought at levels of 1,900. Stock is trading 1,923. Should she hold for upper levels, and what level should she place her stop loss?
Oh yes, so she has bought it at good levels. 1900 is the support. So I think below that, if it goes, it can go towards 1800, but yet it does not damage the trend. The view gets negated only below 1800. And the confirmation of a trend is seen only about 2150. So if that occurs, this will go towards 2800. So final stop loss 1800. Wait for it to go above 2150 and see it going towards 2800 levels. That would be my view.
Okay, so that's with regards to where Gravita stands. Next question is from Vijay, who's writing in from Croydon. His question is on BSE and wants to know as to what is the right time to enter this particular counter. Nirav, I'll come to you on this one. Considering the valuations at where BSE stands plus NSE getting listed, what's the outlook like, and is this the right time to make an entry?
Yes, definitely, because this is a portfolio stock, so you can enter even now.
Okay, so that's the view with regards to where BSE stands. The next question is from Himanshu. He's been holding NTPC Green since IPO listing. He's from Gujarat and wants to know as to whether he should continue to hold the counter or not. Nirav, I'll again come to you on this one. NTPC Green, what do you think is the outlook like? Should he continue to hold?
I think this is going to be a slow mover, so I think he can shift to an Inox Wind. That would be a better.
Okay, shifting to Inox Wind is a better option as compared to NTPC Green is the view coming in from Nirav. Our next caller, Murli, is calling in from Bengaluru. Murli, a very good morning to you. How can we help you?
Very good morning and thank you for taking up the query. This query is the fundamental analyst.
Okay.
I am holding 200 shares from 8th Construction.
Okay.
Bought at 13.99.
Okay.
And yesterday I happened to see the interview of the management with the NDTV team.
Right.
Okay. And I want to know, considering they are talking about the minimum guidance of 15% growth and last 5 years they have grown extremely well.
Right.
Very, very high ROC and leader. Can I add from long-term point of view at this price?
Okay.
Considering their guidance and India's growth story, especially this. They also got a huge order from this defense also for this mining and all.
Right. Got your point, Murli. And for viewers, the interview that Murli is talking about, you'll be able to find that entire interview on our YouTube handles if at all you want to go and check out the entire interview. Nirav, I'll take this up with you. What he's saying is that they've, remained conservative with respect to their guidance. What do you think? Is this a good counter to continue to hold from a longer term perspective? Afcon's Action Construction is the counter.
Yes, Action Construction Equipment has seen a dream run, and it's a leader of sorts as far as the cranes and the construction equipment is concerned. They are also vying for some orders from the defense. So the prospects are very, very strong. And in fact, I think this temporary blip which has happened can be used as an opportunity to add more stock to the portfolio.
Right, so that's the view on Action Construction. Murli, hopefully that answers your question. JP Power, I'm not sure if we're going to be able to get you a view on this, unfortunately. Prashant writing in from Cochin. I'm going to still take a chance and he's bought a level of 15.2. The stock is currently at 15.2. Vaishali, on the charts, is there any sense in holding this for a period of 2 years?
Say so. Actually, the stock is showing signs of revival. So I would say keep a stop loss of 14 rupees. And if the horizon is 2 years, in all likelihood, this can go from 15 to 24. So stop loss of 14 and look for a target of 24.
Okay. All right. So hold on is a view on JP Power. Our next caller is calling us from Bengaluru. Keshav is calling us. Very good morning, Keshav. How can we help you today?
Good morning. This is Keshav from Bangalore. Thanks very much for taking this call.
Our pleasure.
My query is about Bajaj Housing Finance. My entry point was, 165, right? I would like to get the kind of long-term view on it.
Understood. So you bought, when did you buy?
It's around nearly a year ago.
Okay. And so you bought it from the perspective of the long-term based on the fundamentals, that's correct?
That's right, yes.
Okay, Nirav, on the fundamentals, this is a company that has seen between 25 and 30% AUM growth over the course of the last few quarters. It's in a space that is developing. There's going to be need for mortgage going forward as well. Fast growing, over 1 lakh crore of a lending book. What would you say about the prospects? He's bought at elevated levels though.
Yes, the entry point has been on the higher side, so I think the advice will be to still average from the current levels because the prospects are quite good. We have a very strong promoter, the execution is quite strong, the demand is quite strong, and the margin trajectory is quite attractive. So I think the advice would be to average at the current levels.
Okay, average at the current levels is the view on Bajaj Housing Finance. The next question is from Kalyan, who's writing in from Hyderabad. He's holding 1,000 odd shares of HFCL at an average price of 125 a piece and wants to know as to what is the trend that Vaishali you are observing on the charts for the next 2 to 3 odd months.
So I would say actually if he's bought for at higher levels, I think you can average out because the stock is technically got into the oversold zone right from 70 and it's bouncing back and it's making higher bottom formation. So that means it's ready for a takeoff and it can come towards 100, 110. So I think no harm averaging at these levels.
Okay, our next caller, Anant Shaina, is calling in from Bengaluru. Anant Shaina, a very good morning to you. How can we help you?
Hi, very good morning. So I'm Ananta Shena from Bangalore. So I'm holding a RVNL 40-80 quantities at the rate of 25 rupees.
Okay.
So I can hold for long term. I just wanted your opinion about the midterm to long term, whether I can hold or exit or something like that. Yeah.
Right. Anand Shaina, first of all, congratulations of buying, RVNL at such an attractive level. Just want to get a sense as to what was your thinking behind buying RVNL at 25 rupees.
Yeah. Thanks for that. So the idea behind that was, the India is growing and the Indian infrastructure has to go if India has to grow. So, and one more thing, our Prime Minister Modi kept saying about railways a lot. And then I think I mixed my analysis with the government initiative. I think that made me to buy at a very good level of 25 rupees.
Got it. And congratulations on the profits as well. I'll take this up with Nirav. Nirav, RVNL is the counter. He's sitting on a profit of over 16 lakh rupees right now. Should he book partial profits or continue to hold?
Well, congratulations on account of the strong mixture which you created. So I think the RVNL story looks quite good, and we've seen a couple of quarters where there was a lull as far as the railway stocks are concerned. But I think in Q4 we have seen a revival of fortunes. The margins are slowly making a comeback. Government orders are coming. Spending is picking up. So I think you need to keep the faith and hold the stock.
Is the view on RVNL. Congratulations, Anant Shaina, on the acquisition that you've made and also the conviction to hold as long as you have. All right, let's talk about Jose's question. Jose is writing in from Bengaluru and holding on to Piramal Pharma since December 2024, incurring a loss at this juncture of about 10,000 crore. Apologies, certainly not 10,000 crore, 10,000 rupees. If it was 10,000 crore, you wouldn't be speaking to us. All right, bottom levels of 256. Should you exit at this point? Is the question. Time horizon is 1 year. Vaishali?
I would say actually there's really nothing much happening in this stock since quite some time. But now that he's held on for so long, continue holding with a stop loss of 200. Below 200, the trend would further weaken. But this stock needs to move about 230 levels to show some clarity. So right now it's range bound 200 to 230.
So that's with regards to where Piramal Pharma stands. Our next question, Atharva is calling in from Mumbai. Atharva, a very good morning to you. I believe you have a query on LIC.
Yes. Very good morning to you also. So I bought LIC in IPO at 904 3 years back. I'm still holding it, but I don't see much movement in this stock also. But currently it's up now. So should I hold it or sell it?
Okay, I got your point, Atharva. In fact, I was just seeing, and the LIC is right now seeing the highest ever volumes recorded. So it's interesting, and we're also seeing that kind of move in the stock as well on the back of its earnings. Nirav, I'll come to you on this one. What's the view like when it comes to Q4 numbers for LIC, and from a longer term perspective, should he continue to hold or not?
Well, he should continue to hold. As far as the results are concerned, like average kind of results, nothing really great, but then the expectations were so low. So I think everything looks good at this point of time. He should continue to hold.
Question, and this is from my end. We asked somebody earlier as well whether you would pick a general insurance company or a life insurance company at this point. The reason I'm asking is I spoke to a prominent player in the motor insurance space, and what he was pointing out is that you've not seen a third-party insurance premium go up over the last 4 years, but that could be on the cards right now. If that does take place, that would lead to significant improvement in the operational metrics for these general insurance companies. Would you agree, and which one would you buy?
I think GIC fits the bill.
All right. So GIC Re is something to watch out for. The next question is on Tata Chemical, and we've got a question from Advit Sharma, who's bought at levels of 1,182, currently incurring a loss of about 10,000 rupees or thereabouts, and asking whether to hold, exit or average at this point. Hasn't given us a time frame. So Vaishali, I'm coming to you on the charts. How does it look?
Yes, I think a few of the chemical stocks are now showing signs of improvement, and so is the case with Tata Chemicals. I think you should average it out, because once we get a clarity of the trend, this can go towards 1050, 1100 in times to come. So no harm averaging out at these levels.
Okay, so that's with regards to where Tata Chemicals stands. Our next caller, Ravi, is calling in from Hyderabad. Ravi, a very good morning to you. How can we help you?
Yeah, very good morning. Yeah, my query is on Paradeep Phosphates.
Okay.
I want to know what is a good price to enter into the stock.
Okay.
And I can hold for 1 to 2 years.
Okay, got your query, Ravi. I'll take this up with Vaishali. Vaishali, do you think this is the right time to make an entry in Paradeep Phosphates?
Not really, because the stock has given one-way rally right from 90 to now 162. So ideal level, wait for a dip, maybe at around 140, 145. That would be still better to get.
Okay. All right. Shri is writing in, and when I asked him where he's tuning in from, he says, from my mobile. Thanks so much for that information, Shri. And then he specified that he is traveling abroad. So I hope you're having a great holiday, Shri. He's asking about State Bank of India and looking for the long-term prospects. Nirav, in the banking space, would you say that State Bank of India is something that you should acquire right now? Is it a portfolio stock?
It is a portfolio stock, but it will give slow returns. So I think we would prefer to go with an ICICI Bank.
He's clarified that he's talking about 6 months to a year. So from that perspective, Vaishali, at 798, close to 800 levels, would you buy for that time frame?
I would say so, because right now also, if you see, banking sector is doing very well, and compared to that, the PSU banks are not yet showing that great movement. But technically, I would say it is very well placed, and I'm looking at a target of 900, 920 if 1 year is the horizon. 1 year, 1.5 year. Time is difficult to tell, but yes, the next target that we would look at will be 900, 920. So why not?
Okay, all right. So that's view on State Bank of India. Satish is calling us from right here in Navi Mumbai, Panvel. Good morning, Satish. How can we help you today?
Yes, I am holding Bharti Airtel, 7,000 shares at the rate of 1845.
Okay. And what would you like to know?
Yes, sir. Actually, the stock is consolidating, not going the good move. So where should I book this call?
Okay. So did you buy it based on the fundamentals for the long-term growth story?
Yes.
Okay. So
fundamentals for short term. Okay. Many big houses are betting on the Bharti Airtel telecom story. That's why I bought it.
So you've got a view of less than 1 year or more than 1 year?
My views are around 1 month.
1 month. Okay. All right. So Vaishali, on the charts then, it's at 1858 and he is making a decent profit because he's bought 7,000 shares. So pretty sizable quantity. Would you book at this point or hold for higher levels?
I would not say book, because it is showing a lot of strength. So hold with a relative trailing stop loss and look for a target of 1900, 1920.
Okay, so that's with regards to where Bharti Airtel stands. The next question is from Rohit, who's writing from Nagpur. He's holding ICICI Lombard General Insurance and took at 1809 a piece. We've already taken Nirav's view on whether he should choose, one should choose LIC or GIC. Vaishali, I'll take this up with you. ICICI General Insurance, what are the charts indicating?
So I think still there is a lot of scope upside. So I would say continue holding. This can go towards 2050 and longer term horizon, I think 2300, 2500. So I think continue holding.
Okay. Himanshu is calling us from Lucknow. Namaskar, Himanshu. What is your question?
Actually, I am holding PNB shares of PNB Bank, 200 shares at the rate of 98.78.
Okay.
And I can hold for maximum for 6 months more.
Okay, understood. All right, so let me get a technical view from Vaishali on your share price. You bought at levels of 98.78, not too far from the current market price. It's just over 100 rupees. Punjab National Bank, would you hold on, and what levels would you watch for 6 months?
So my view remains the same, that as PSU banks have not participated, PNB is also one of them. And if 6 to 8 months is the time period you're looking at, I think if this sector picks up, this can go towards 125 levels also. So hold. Don't be in a hurry.
Okay, hold is the view coming on PNB. Our next question is from Satish, who's holding 300 odd shares of Varun Beverages at a price of 580. He's sitting on a loss of almost 29,000 rupees right now, and wants to know whether they should continue to hold or not. Nirav, I'll come to you on this one. Just the other day we were discussing how Campa Cola, is possibly giving a tough competition to Varun Beverages, plus Jubilant Group also acquiring Hindustan Coca-Cola. What's the outlook like for Varun Beverages?
The competitive intensity is quite high. There's been an early onset of monsoon that is also likely to impact the demand. Regional players have become very aggressive, and the larger players, of course, the incumbents have also picked up pace. So I think it's going to be a tough road as far as Varun Beverages is concerned.
Avoid at this point, book profits if you have them.
Yes, it's better to book out of Varun Beverages.
Okay, all right. Coming back to you, Motherson Sumi is the name of the counter. Actually, I'm not sure if he's talking about Motherson Sumi or Motherson Wiring or Samvardhana. So why don't we talk about both? Vaishali, between the two of these at the current level, Kiran wants to know, which would you buy?
Well, so Samvardhan, Motherson, if you talk about, it's already a good trend, but buying appropriate level would be 135, 140, and look for a target of 170. And the other one that we are talking about is Motherson Wiring, that is 59 rupees. So I would say currently it is at a resistance level. If you need to buy this, wait for a dip retracement coming towards 53, 54.
Okay, the next question is from Angad, who's writing in from Indore. He wants to add some stocks from the hospitality sector and wants to know as to which counter can he invest in right now. Nirav, I'll come to you on this one. Any particular stocks that you're looking at and are attractive enough to buy right now in the hospitality space?
We already had Indian hotels in our portfolio, but now we are looking at East India Hotels, EIH, Taj GVK, and APJ Surendra Park Hotels.
Okay, interesting. All right. So it's an interesting space because ultimately the consumption story is being played by a lot of people through these hospitality stocks. So watch them very closely. Angad, hopefully that answers your question. Let's move to the next one though. And we've got Sunena, who's asking a pretty broad, open-ended question, but might still be difficult to answer. This one's for you, Vaishali. 2 lakh rupees she wants to deploy for a period of 1 year. And she's asking for one stock in which she can deploy it.
Well, so as we just spoke about Epack, I like Epack technically also. So that could be one of the stocks that you can invest. 370 is the support level, and this can show a target of 450. And if you said 2 years, right? So I think this can go towards even 600 level. So Epack is one of the stocks. And if you want to go in the front line, then I think capital goods are quite promising. So I would suggest Siemens at these levels.
Okay, the next question is from Milan Sarvaiya, who's writing in from Bengaluru. He wants to buy Thwini Turbine at the current market price and wants to know if that's the right thing to do. Nirav, I'll come to you on this one. He wants your opinion specifically. Should he enter Thwini Turbines?
I think he should wait for a correction before entering into Thwini Turbine because the stock has run up quite well. It's had a very good quarterly results also. So I think the better thing is to wait for some correction, let the stock consolidate, and then he should enter the stock.
Okay, Bhanu Prasad is writing in from Amravati and asking about Hindustan Construction, which he's bought at levels of 42 rupees per share, I believe. 3,000 shares have been bought. The stock is currently trading at 32 rupees. He's looking for a 1-year time frame. Vaishali, on the chart, should he hold on?
So I think it's nearly done with its corrective move and it is surging high. So yes, continue holding or even average out because once you see this stock moving above 36, which is the near-term target resistance, it can go towards 45, 48. So I think to lower the cost and to get quick returns can average out at these levels.
Okay, all right. It is time now to hit the rapid fire round, and this, Nirav and Vaishali, is where we throw as many questions at you as possible over the course of the next 2 minutes. 2 minutes is what we have, not 15. And I'll start with V. Let's talk about that. Bhupendra wants to know, should he hold on if he's bought at levels of 6.8? Vaishali?
Sorry, which one is this? Oh, no. I would say exit.
Okay. All right. The next question is on Persistent Systems. The person has bought 4,500 odd share at the rate of 4,500. Wants to know whether he should hold or exit. Neera, what's the view like?
Hold.
Jubilant Foodworks bought at levels of 670. Jacob from the UAE wants to know, should he hold or exit? Long-term investor, 5-year time frame. Nirav?
Hold.
Mahalakshmi from Hyderabad is holding 54 shares of KI Industries at 3480 a piece. Wants to know as to what should be the next course of action. Vaishali, your view?
KI Industries, I think hold. It will go towards 44.
Okay, Inox Wind, I'm coming back to you on this one. Shamik from Bengaluru wants to know, what level should he enter in, if at all? What's the view?
So Inox Wind currently 195. Enter price should be 180, 170.
Okay, sale is the next counter. Raghunath from Pune wants to know short to medium term prospects. What are the charts indicating, Vaishali?
So short term target is 133. Next target is 143. So these are the levels one can look.
Okay, block in PG Electroplast, it was in focus. We've got Sumit, who's bought at levels of 805. He's wondering, for a time frame of 1 year, should he hold or exit? Neera, what's the view?
Hold.
Okay. Prediction for Tata Motors. Currently purchased 10,000 units at 738. What are the charts indicating, Vaishali?
Continue holding for a target of 800.
Okay. Would you buy any InvITs, Neerav, for the dividend play at all? InvITs? No. Okay.
Okay. IDFC First Bank, 1,400 shares bought at 78 a piece. What are the charts indicating, Vaishali?
I would say shift.
Shift to what?
Frontline banks like Axis, ICICI.
Okay, all right. On that note, thank you so much to the both of you for taking the time. Always a pleasure having you on the program. All right, that brings us to the end of this edition of Ask Profit from Mahima and myself and the team that put the show together. Thank you so much for watching. Up next is Know Your Company, and this is NDTV Profit.
गोल्ड क्लास ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay Stay ahead of the curve with all you need to know on NDTV Profit. The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome. You're watching KYC. I'm your host Harsh Saita, and today we're going to look in at Info Edge. It's an interesting company because one, it's an expensive one. Two, it's also a holder in Zomato as well as PB Fintech, two absolutely new age listed companies now by themselves. And it derives a third of its market cap from those two companies. But most importantly, what does Info Edge do in terms of core business? And the core business is Naukri.com. So hiring trends, Q4 has been better. Is FY26 going to be even better in terms of hiring trends is what I want to understand. Because if you're trading at the kind of valuation that Naukri is trading at, which is around 75 times 1 year forward price to earnings, then I want to know whether the business underlying is going to do as well in terms of growth. So that's going to be the first piece. And within this hiring, IT is going to be is the big bulk of the hiring that Naukri generates. And therefore, is IT hiring at a risk given AI as well as some of the other trends playing out? In the core IT business, a TCS, Infosys, we're not seeing hiring pick up, even though the Info Edge business does not seem to be very, very affected by it, but one would want to understand whether there is that risk which Info Edge business carries from a hiring perspective. The other piece is other businesses. So the other businesses that it does, the likes of a Jeevan Sathi, 99 Acres, Shiksha. Jeevan Sathi is the matrimony platform, 99 Acres is the real estate platform that it runs, and Shiksha is the educational platform that it runs. Now, when you're looking at profitability in all of these businesses, has not happened. So basically, Naukri is the one business which is profitable, which kind of diverts money into these businesses to ensure that these businesses can continue to run and continue to scale, and hopefully at some point start to generate profitability, core profitability. And that's what all business is about, right? When does that happen is really the question, and whether when that happens, as and when it does, whether that is sustainable or not. Now, the fourth piece of this is, how do you monetize some of these? So maybe they turn profitable at some point, maybe next year. Do you monetize your opportunities at that time? Is there a plan to monetize? Because shareholder value will get unlocked only when you monetize some of these prospects and businesses. And what are those plans? And the last one is with regard to promotion spends. Now, this is more micro than macro. A lot of the margin also depends on how promotion spends go. And what brokerages and analyst community has done this time around is they've reduced the EPS estimates with regard to FY26 and 27, saying that there may be some amount of pressure with regard to margins which are coming through, and some portion of that is because of promotion spends. So I want to understand whether that at all is at risk or not. So all of that and more once we start to analyze Info Edge, and of course we'll speak with management as well. But first off, I want to start by introducing the company itself. At its very core, it's an online classified company. it has a portfolio of brands, and what it does is it services companies as well as individuals to help with regard to marrying both sides with regard to hiring and people. So that's essentially what it does at its very core. That's how it was conceptualized and started. Now it owns a bouquet of brands. So let me talk about the first and the largest one that it owns, which is Naukri. It's an online recruitment platform. This is the first part of the business. The second part of the business is you have a 99 acres, which is an online real estate platform. The third one is Jeevan Sathi, which is an online matrimonial platform. And fourth one is Shiksha, which is an online educational information services platform. So that's how it runs its business, core business. Outside of this, it also incubates other businesses. So it acts as an investor and has invested in several startups, starting from a Zomato and a PB Fintech, and now runs active portfolios within itself. It also has an AIF where Temasek has a 50% investment in. So it's fascinating how they have pivoted in terms of their business. They started off with core Naukri, and they had the very, very famous founder, Mr. Sanjeev Bikhchandani, who is now worth, $3 billion odd dollars. But he incubated this business from scratch, and it's a $0 to $3 billion story for someone like the founder of InfoEdge. But that apart, it has investments with carrying value of around 640 odd crores. So all of the cash flow coming in goes into these investments in new age tech companies, including the likes of an AI. Now they have financial investments in some of these companies as well, which are flashing on your screen, but along with it, they have several financial investments in plenty of companies through their AIFs. These are some of the strategic investments that they've done, of course, which are very similar or which help their existing and current businesses. So all of that, plenty to unpack, of course. Now, in terms of the largest ones, the financial investments, the largest ones is a Zomato, where it owns a 12% stake. Zomato is worth 2.2 lakh crore. 12% of that is around 25,000 crore in itself. PB Fintech, which is again worth roughly 10,000 crore or 12.5% stake in PB Fintech. So overall, the value of a PB Fintech holding of InfoEdge is around 10,000 odd crore. So Zomato plus PB Fintech at current market value is worth around 35,000 crore within that InfoEdge basket. And then of course it runs InfoEdge Ventures, which is what I spoke about, the AIF through which it makes financial investments. So all of that. But let's talk about the core business a little bit more. This is how the recruitment business revenue has been growing. Look at it, 770 crore in FY21. It's gone up to around 1982 crore in FY25. But you look at the last 3 years, right? FY22 to 23, fantastic year. 24, 25, growth not coming through, right? You can see that visible in terms of the numbers. And this is the core business of InfoEdge. So this is where I have started to try to understand as to how the risk is getting built in with regard to both valuations. That's one, something you want to understand as well. And two is the fact that can this grow and scale at the rate at which it did in FY22 and FY23. That's really the setup that I will want to look at when it comes to recruitment. Now look at matrimonial now. Largely flat, right, over the last maybe 5 to 6 years. No real traction seen here. Profitability, you'd want to wait and watch and want to understand how this becomes profitable, because currently looking at the numbers doesn't seem like an enthusiastic set. Let's look at property now, the 99 acres business. There too you've seen decentish uptick, right? So this one again chugging along fine. And the last one is education, where you've seen the sharpest uptick in terms of the way in which the business has scaled. But you want to try and understand whether the scalability is followed by profitability or not, because that will hold its key. In terms of the total, the net sales sits at around 2,657 odd crore, but out of that nearly 2,000 crore comes from the Naukri core business. So that's how large Naukri is in terms of contributor to top line. Even in terms of growth rates, Naukri of course hasn't done as well in FY24 and FY25, just an 8% growth in FY24, just a 10% growth in FY25. So the recruitment growth hasn't come through, as you can see on your screen. We saw the numbers in absolute terms, we're looking at the percentage terms now. That growth hasn't kicked through, especially with regard to its most profitable Naukri business. So I want to see whether that business actually starts kicking through in terms of growth. The matrimonial business has done okay in FY25, but of a low base, because FY23 we saw a degrowth, mind you. Property has done decently well. We saw how it's been doing, 17% growth on the back of 31 and 24, not bad at all. And last one is with regard to education. You're looking at, again, a declining growth clip with regard to education. Even though we saw a good solid spike in terms of the numbers, now it's declining. You want to see whether these start making profit, because growth is declining and you want to see whether profitability starts to kick through or not. Now let's quickly talk about the recruitment business in terms of sector wise. What you're seeing is the top line is around 1880 crore, the sector-wise revenue picture, versus the 2000 crore number in FY25. We spoke about some of these numbers, and look at the total number. It's 2850 versus 2000. So a large part of the revenue sits in the recruitment solutions business. Now I want to also last off talk about the 99 acres business, the total listings, because some of those also contribute to how the business traction is and how that gets built up. So when you're looking at, okay, so this is the billings by customer type, the different types of customers which contribute to the billings within the recruitment business. This is the recruitment consulting business, contributes around 26%. The tech and IT services 28%. Now, why I have put this up? Because this tech and IT services is at risk given AI. So I want to see whether that is actually at risk, or can the growth clip and the revenue and the billings by customer in terms of percentage continue. That's how the breakup with regard to the 99 acres customer base is. The type of customers, brokers, owners and builders. That's how the split currently sits at. Again, the billing breakdown, brokers, owners and builders. Just for information, of course, as to how the billing as well as the business works with regard to 99 acres. Now let me quickly take it across. I hope we've tried to, as comprehensively as possible, cover the way in which this business works. Let's talk about the metrics that we look at on today's KYC. We look at the income statement, the balance sheet, the cash flow, the shareholding. So those are the four first metrics we look at. Thereafter, we look at street cred, outlook, valuation and street coverage. That's how we'll kind of cover all of the parameters today. Let's start off with the income statement. The top line growth has been reasonable, 21% odd over the last 3 years, FY22 to FY25. That's quite a decent growth clip. EBITDA has gone and done much better, because some of the non-profitable businesses are obviously inching towards profitability, and that's why what you are seeing is your EBITDA going up 31% on a compounded annual basis. The net profit may not be the best metric to look at, because there are exceptional and one-off items which are always sitting there. Like for example, in FY22, you had the listing of a Zomato, where around 2.5% stake was sold by Info Edge as part of the IPO, and some of those proceeds are sitting there in the net profit number as well. So maybe not the best metric to look at, but look at the revenue and the EBITDA. Honestly, it's a cash flow positive business, and therefore the net profit in its core sense may not really matter as much, given the kind of gyrations that you will see periodically with regard to the net profit number. Let's look at the balance sheet now, and let's try and break this one down. Now, in terms of the balance sheet, it's a clean balance sheet, no equity raises that they do, a large other equity base. Look at the way other equity has gone up because of all the stake sales that they've done. So 13,000 crore was the equity base maybe in FY23. It's currently sitting at 35,000 crore. There's no borrowing on the balance sheet. There's decent amount of cash sitting on the balance sheet. They continue to deploy the free cash. I did mention in some of the ancillary businesses which they run, as well as the fund which they run to incubate other businesses. So, so that's how the play kind of works with regard to the balance sheet metrics. There's definitely a decent amount of cash and no real equity or debt issues per se. Let's talk about quickly the third metric, the cash flow. Now you look at the way in which cash flow has gone up. It's a free cash flow generating company, mind you. It continues to generate cash at a rapid pace with regard to its platform businesses, because the platforms are already set up. What they do is they do a little bit of investing in AI to optimize the platforms better. But outside of that, your cash flow from operations continues to grow at a very healthy clip. So no concern there. We've given that a thumbs up as well. Some of this cash, I did mention, gets invested to their AIF, which invests in new businesses. That's how the net cash flow adds up, and which is why it's currently negative. They also give some amount of dividend to shareholders, which kind of impacts that cash flow number. Let's talk about the balance, let's talk about the shareholding now. When you're looking at the shareholding, around 38% is promoter holding, around 30 to 34% is FII's holding, around 16 to 18% is DII holding, and the balance is public. See, the public holding is very low, which is likely a positive of sorts. But when you're looking at the promoter holding at 38%, 24% is owned by a Sanjeev Bikhchandani alone, who is the founder, and thereafter there are some of the other promoters which also hold stake. So that's how the 38% is held. In terms of when we've seen promoter incubated businesses, we've seen that they hold a larger stake. Promoters hold a larger stake. That's not so here, because it's a typical Indian startup which has diluted some of the promoter holding. No concern, let me put that across in candid terms, but when you have FII and DII holdings which are that large, you might see exits, and therefore you could see some exits happen at some point. So something to look out for, and hence we've been slightly more cautious and given this a neutral. So shareholding out of the way, let's talk about street cred. Now, in terms of the way the stock has performed, 1 month absolutely flat, 6 months down 14 odd percent, year to date down around 19 odd percent. So some pressure in the very, very short term, but in the 1 year term it's up 16%. So that's a positive. And then you're looking at a 5 year where the stock is up 2.5x. So it's a 2.5 bagger over the last 5 years. Therefore, we've given this a clear thumbs up with regard to street cred as well. Now I want to delve a little bit into the outlook and what's playing out. One, the company owns around 12.5% in Zomato and PB Fintech. I did mention this. I did the math as well. Around 35,000 crore in market cap currently owned by these two. Typically, you give a holdco discount when you have such large holdings in companies, and therefore even if we were to give a holdco discount, that'll be around 20% odd. That's what average analysts are penciling in terms of holdco discount. The second piece is it leverages on cash made by Naukri to invest in newer businesses. It invests in existing businesses, uses the AIF vehicle to invest in new businesses as well. It's now set up a completely different business with regard to investing. It does that through its AIF, which is the vehicle they use. The recruitment growth is led by niche and adjacent segments, including branding services. You want IT to grow or you want branding to grow? That's really the question, and that's something I will pose to the management as well. The A&P spend has increased, which is likely a concern and might impact margins. You have hiring activity, which remains subdued at this point, and therefore likely if IT hiring activity were to pick up, you could see a positive, but at this point, it's still weak. Look at expansion into new towns and customer additions. That's what's driving growth. It's not IT revenue or hiring. It's expansion into new towns which is driving growth. In property, you look at billing growth, which has accelerated in Q4. Can that sustain? Can profitability as well come through? And in terms of cash EBITDA, the segment has improved given the strong billing. So that's how we kind of sum it up with regard to what the outlook is. Let's talk about valuations now. In terms of EPS, FY26 average analyst estimates 19 rupees of EPS, FY27 23 rupees of EPS. So you are seeing the price to earning multiple shrink quickly, but as per Bloomberg, the competition average is 31 times. If I remove Zomato and PB Fintech from the market cap to adjust the price to earnings ratio, that adjusted price to earnings ratio will also be maybe around 50 times odd. So therefore, you will see this as slightly expensive compared to competition, maybe much more than slightly expensive compared to competition, and therefore we've given this a thumbs down, given that growth does not seem to be very strong like some of the other startups. We see startups growing at 20, 30, 40%. This one is growing somewhere at mid-teens. So something to take care of. Last off, with regard to analyst recommendations, there are 15 buy calls, 5 hold calls, 1 sell call, potential return being 14%. There is some bit of caution. We'll give this a neutral as well. To sum it all up, let's look at the rating. It stacks up as you can see on your screen. There you go. So 3.5 with regard to the first 4 metrics, and thereafter you have 5.5 as the total of our on our KYC rating with regard to an info edge. That's how it stacks up. Now let's quickly go across. We spoke with the management earlier. I spoke to Chintan Thakkar, who's the Director and Chief Financial Officer of InfoEdge, and I started off by understanding the risks which are getting priced in for FY26 from a growth perspective. Listen in to that entire conversation. So first off, I want to start off with Naukri. Growth in Q4 looks decent, but can this sustain is really the question. When I'm looking at the numbers, maybe over the last 3 years or so, the growth hasn't really seen a significant uptick. Do you see that in FY26, and what's the reason for that? Give us some perspective.
So first of all, thank you very much for having me.
It's a pleasure.
Going straight on the questions on the recruitment solutions. If you look at 3 years as the time frame, then we were coming out of COVID, and I think there was this great surge that happened, right? And in that process, what happened is that there was a level of overhiring that happened. So that's why in the second year we've seen that kind of the growth kind of got steady over there, right? And it was flattish. If you really look at this year, right? This year in FY25. We have seen that Q1, was little kind of, it's coming out of that, the flattish type of a year that we had, in FY24. And we had said that, look, it seems that we are coming out of that U-shaped recovery, right? And that's what happened. So Q1, the Q2 was better than Q1, Q3 was better than Q2, and Q4 seems to be better than, Q3. So I think it looks like that it's an upward trajectory. And when I look at the numbers, and we can divide it in terms of the verticals, in terms of geography, functions, yes, there would be some pockets of higher growth and some would be little lower growth, but on the whole it looks like that it's a very secular trend. Also what we are hearing from the ground is that I think there seems to be a little bit of momentum continuing over there. We also seem to be executing much better because of the adoption of AI that we have done in our products as well, in terms of how our algorithms are working, how our matching platforms are working, right? So when you look at, let's say JobSpeak Index, as compared to that, we seem to be performing, a bit better. And I think a lot to give credit to how the product and the engineering people and the sales guys have kind of really performed. So we seem to be doing little better. I really hope. Of course, in today's world, I think every day and every week could be very different, and the whole business environment seems to be so volatile. It keeps changing. Business confidence keeps changing. This is one tweet or one news item.
Sure.
I think keeping that and all those external factors which can impact us. Other than that, that it looks like that it's a reasonably that yes, Q1 to Q2 to Q3 to Q4 we seem to be ramping up. And maybe we should be able to hold on to this type of growth. Certainly from our side, we would want to achieve that as a part of our goal for next year.
Sure. So with regard to IT in particular, and I'll talk about the recruitment business first, let me take that out of the way. IT, there still seems to be some amount of momentum which needs to get built up, because that doesn't seem to be playing through. What's the sense like on ground with regard to IT, and do you believe that there is a systemic challenge that IT recruitment may be on the wane for maybe the medium term? Is that a risk that you're dealing with, given the AI, given the AI risk that IT employees run?
So first of all, I need to put the IT in perspective, because when we say IT it's a very broader kind of a spectrum, right?
Sure.
So IT has IT services, the export-oriented IT services company. Some of them are listed, and a lot of the narrative gets built on the basis of what those guys are really talking about in the market. But then there are product companies, there are PPOs, and there are GCCs, right? So there are some pockets where it seems to be doing well. GCC is certainly a brighter spot, than what the IT services companies are. So I think on the overall trend basis, we think that there are certain pockets in IT where it seems to be an opportunity so far as our business is concerned. I also want to kind of highlight that, like I said in my earlier comment, that look, even if there is no gross hiring happening in IT services, there is attrition. Right? And the attrition is also because of GCC coming and triggering some of those attrition. Some of these startup companies that gets funded, or some of the other tech-oriented manufacturing that seems to be setting up in the country, that kind of triggers some of the attrition. And when there's an attrition, there is at least a replacement. So for us, whether it's hiring because of the overall growth and expansion, or it is just to replace the existing account, for us it is still a growth. So in that sense, I think we need to also take into account that IT services company, their utilization rates are at its peak, and they seem to be doing a lot of replacement hiring. That's certainly happening. So that's helping our business. That trend may continue. The AI trend, has also there are two sides of the spectrum. One is that the lower value items, which is mostly like around customer support services and some of those type of segments, there could be an impact over there. But at the higher end, the guys who are involved in data science and machine learning and high-end engineering, I think there the demand is far outweighed than the supply is. So I think again it's a mixed bag over there. Yeah.
Sure. So point taken. I want to therefore talk about now other businesses. What's the profitability outlook there? Because while Naukri continues to support those businesses well, at some point you'll want them to turn a corner, right? That doesn't seem to be happening.
Well, I think that we have arrived at that point. So if you look at Q4 numbers on the top line on billing, all the four businesses have kind of clicked good amount of growth. So overall we have grown. Billing growth is about 19%. Which is just not about Naukri, but even if you look at 99 acres, you look at Jeevan Sathi, Shiksha, I think so everybody seems to be growing. And probably this is the first time that we are seeing that all four cylinders are are firing, and they all seem to be growing profitably. So even if you look at from the cash from operations for each of these businesses, which sometimes when you just look at the PBT, which is PBT is when looking at top line as revenue, which is like looking in the in the rearview mirror. But when you look at the billing and you look at the expenses, you realize that there is a cash profit that's got generated. So non-recruitment business taken together, it's a cash positive this quarter. And when we look at each of the businesses, like Jeevan Sathi, which used to burn cash, which we have seen a decline in that. Even 99 acres, I think for the year. So both are kind of close to EBITDA neutral. And not only that, for in real estate business, 99 acres, we seem to be also gaining market share. So it's just not about that we are growing efficient, but also we seem to be growing in terms of.
Okay, so that's of course the conversation we had with InfoEdge, but completely out of time on this edition of KYC. Stay tuned to NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
The markets move fast.
And so should your portfolio. Expert expert insights, real-time stock picks.
Do I buy Ola?
Should I
or
hold
lifetime
ICICI
investment?
CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Markets continue to trade in a range bound. Nifty trades below 24,800. Sensex trades flat. ITC tumbles over 4% as British American Tobacco offloads a 2.5% stake, accounting to capital worth over 12,000 crore rupees. Earnings candidate LIC is gaining in trade as company clocks over 30% growth in its March quarter. NSE valuations hit a huge 5.8 lakh crore in private markets ahead of expected SEBI nod for IPO. Well, that's an NDTV Profit exclusive for you. And it's raining exclusive. Sources tell your channel that Elon Musk's Starlink is poised to kick off phase 1 operations in India with a satellite capacity of 600 to 700 Gbps. Well, hello and welcome to Markets at 12. I'm Anushi Vakharia. Let's take a quick look at how the markets are faring in trade currently. Now, in terms of where the benchmark indices are holding up, we are looking cuts of about 0.26% in Nifty 50. Well, in the last half an hour or 1 hour so, markets have been just seeing in a choppy trade, range-bound kind of moves is what we are looking at. If you talk about the Nifty bank, now flattish moves over there as well. Almost in the red, seeing flat cuts is what we are looking at. Let's pull out the point contribution table, in fact, for Nifty 50 to see where the action is unpacking. So something like Bharti Airtel and Infosys is trading in green. ICICI Bank, BL, another counter which is up 1% in trade today, while counters like ITC, Reliance Industries are in pressure. Now ITC is also in focus on the back of British American Tobacco offloading 2.5% of its stake, while we are seeing some pressure in counters like HDFC Bank, M&M as well. So that's as far as where the Nifty 50 point contribution table is. In fact, let's also look at the Nifty 50 heat map to see which are the top gainers and the top losers. So right at the top, what we are seeing is ITC, Bajaj Auto. They are right at the bottom of the list, while Bharat Electronics, the top gainer for today, up over 2% in trade. HDFC Life and Bharti Airtel seeing gains of around 0.8 to 0.9%. But if you talk about the sectors today, now where the action is in terms of sectors, if Nifty Defense, right at the top, gains of over 1% is what we are looking at. Like last week, it had cooled off for some of the gains that we had seen after the kind of rally which had been happening over the past few sessions. But again, it's in trade, it's back in action today. While something Nifty FMCG is seeing cuts of over 1%. But let's take LIC in focus. We had a conversation with Siddharth Mohanty, CEO and MD of Life Insurance Corporation of India. Let's listen into that.
It was a good year on a whole, and I'm told that you're retiring next week and you're leaving on a high, highest ever VNB margins, higher individual premiums, highest bonus to policyholders. How do you sum up the fourth quarter as a whole?
You see, the impact actually post product regulation change, it has impacted our Q3 last year. Yeah. But somehow we regained in Q4, actually towards last part, towards March, not in January, February. February some growth was there, but March we... So that made some, whatever loss we made, that we could make up during Q4.
Sir, and if you look at the APE growth, for the first half it was 26% odd. And full year we have seen, on a flattish note we are ending. How do you see APE growth from here on, and what do you see as the key strengths of LIC which will drive that APE growth going into FY26?
You see, if you see entire industry, EV has been affected 24-25. But for us, somehow we have shown some good growth, 6.45% growth in EV. So current year 26, I am confident because the way we have taken certain strategies, further growth will be there in EV.
And how about the APE growth, premium?
AP actually last year AP was just flat because of, as I told, product regulation changes and all those things. Our people, they take time to adjust. But current year we have particularly focused on WRP and AP. That is our target, not a total premium like single launching, no. Yeah, WRP, AP. So my sense is in current year there will be good growth in AP.
So while non-par has been good for you, you've been able to take it up as part of your product profile to 27%. Par is something which is a challenging one because of the regulatory changes we saw in the second half of the year. How do you see par product growth, especially given the fact that the ticket size have gone up for par products? So how do you see the growth coming in for par products?
You see, par we still maintain more than 72% because 27.69 is our non-par share and 72.31% is par share. And par, you see, yesterday we declared 56,000 crore plus bonus.
Yes, highest ever actually.
Highest ever bonus that will go to par policyholders.
Yes.
So my sense is par product also will launch, which will be attractive, and the policyholder will decide whether to take non-par or par, because both products have their own inherent characters which will attract policyholders. Benefits are there. So par policy also will maintain our in total basket, though non-par will grow, but will not ignore par.
Sir, we've been talking for a couple of years, and every year when we speak, you talk about how you are focusing on product innovation and product mix change towards non-par so that your VNB margins go up. We're ending the year at 17.6% in VNB margin. How do you see that margin going up from here, and what is the kind of strategy that you will have for non-par? Because you have always said that you want to reach out to the private players who have 20 to 25% VNB margin, and that's the goal ultimately which LIC has. So what is the game plan that you have here?
You see, margin last year 23-24 we gave a 16.8%. So now 80 basis points growth is there, 17.6. And the way current year strategy already we have adopted, initiated work is going on. Further growth will be there, and I am very much confident at least 2-3% growth will be there in the current year margin, VNB margin.
Do you see FY26 you ending with a VNB margin of 20%?
Around that is our objective.
And that would be led with more non-par products coming into play?
Both non-par will be there, of course, non-par will be there.
One of the things which is coming out is the kind of distribution network that you have been able to put. You have around more than 50% people more than 5 years into the play. How is distribution playing a bigger role now, given that you have challenges coming from the regulatory front with respect to ticket size of par policies have to be increased, and those things coming into force?
No, it takes actually time, because any change, because that will take time, because our field force they have to adjust, and already that is over. Last 6 months you see our field force, and some impact on business also is there. But current year they have adjusted, and ticket size, any change, our agents are well prepared, and they will sell good policies.
And they should be able to come back to normalized level of selling?
Normally, yes.
And that will happen in FY26?
Absolutely.
You said that non-par is now roughly around 28%, 27.6%. What should be the optimal mix for par and non-par?
You see, that depends on how we promote our non-par product, but there will be good mix, and some growth will be there. Further, some growth will be there in non-par.
And because that's the one which is driving your margin, and you said your driving margins have to reach to 20 plus levels. So is the aggressive push that we have seen in the last 2-3 years under your leadership of pushing more non-par so that we get a better VNB margin, that's going to continue?
You see, though margin, of course, growth in margin will be focused, but at the same time, growth in bonus, as we demonstrated 56,000 crore plus, both to make that balance, it is a very difficult, challenging task. But I am thankful to entire my team, actuarial people, everything. So we will maintain both. We will demonstrate growth in margin. We will also demonstrate growth in bonus also. So both par as well as non-par products, focus will be on both, but there will have balance mix.
As the industry leader, sir, we saw the biggest disruption in par products because of the surrender value regulations which came in. How did you navigate through that? Because that would be a good learning for industry of how the leader managed a rehaul of the entire product portfolio and relaunching it and coming back.
You see, last 6 months, because regulation came in October, we do not experience any such adverse thing in surrender. And my sense is, because surrender, in any case, surrender is lost to the policyholder. And surrender defeats the purpose of insurance. So even if surrender regulation has changed, first year more surrender value you will get, but you will get still less whatever you have paid. So you are a loser. And over and above, you are losing your risk also. There will be no risk because you are out of contract. So my sense is this regulation will have very, very minimum impact or no impact, because it is actually designed for people who may be under stress, because somebody has taken a policy under some circumstance, but certainly something, some family emergency, medical emergency, something happens, he wants to withdraw, he does not have any other source. So he wants to surrender that policy. Earlier that was not there, now that is there. So that category of people will be very, very negligible, very minimal, and unless there is very much urgency, nobody will withdraw policy.
And you see this impact having very minimal going into FY26 as all your policies have been redesigned accordingly.
Yes.
How do you, what is the kind of strategy that you're going to have for par policies going forward? Because this is a policy which is more in term insurance kind of nature, and as you said, only under stress people will surrender. but are there policy product gaps for you in the PAR segment?
PAR also will also depending upon the feedback from market, because we take market feedback from our agents, customers, we design product in both segments, non-PAR as well as PAR. And my sense is, since recently we gave this bonus 56,000 crore, it is very much attractive. PAR policyholders also get very high return. And if we design good product in PAR segment also, that will get traction in the market. So my sense is both PAR as well as non-PAR, both will continue.
Sir, if I look at the market share, there has been a slight decline in market share on a year-to-year basis, and it could be understandable because the industry players are increasing and the pool is also increasing. How do you look at your market share? Will there be a time where LIC will look at, say, that I will have to maintain my market share at the cost of margins, or I will continue to grow and let the market grow as a whole?
See, market share is a function of growth. The rate at which smaller players grow, for me, having a large base, it will be challenging. Having said that, we have our internal strategy. We cannot go below certain share in the market. That is our internal thing. But what we are focusing now is profitable growth. Post-listing, growth over growth, that we are demonstrating profitable. So that is our focus area. So that in coming days, you will get more profit, more bonus for policyholders. But at the same time, market share at certain level will maintain.
Sir, if I look at your embedded value, and you said that your embedded value grew at around 6.8% this year, is that the comfortable level of growth that you're looking for your embedded value going forward? Because you've been growing at a much higher rate, actually.
It will further grow. And my sense is it will go further in the current year. Rate will be higher.
And how do you look at the market risk which is there, or economic risk which is there in today?
All these are embedded. Our people calculate everything while designing product, everything. So that will factor into.
In the last 1 year, sir, your exposure to the rural markets have increased with respect to distribution. How do you see product sales or product adaptability in that market, and your entire online digital framework of Ananda which you had launched, how is that expanding?
You see, if you see rural market particularly, I will just mention here, we have launched one Bima Sakhi, Women Empowerment Mahila Career Agent Scheme by Honorable Prime Minister on December 9th last.
Yeah.
And if you see the data, after Bima Sakhi launch, share of female insurance has gone up from 28% to 34% plus. And that is mostly from rural areas. And our objective for rural area, because we want to cover all rural panchayats. Every panchayat we should have at least one Bima Sakhi, so that to achieve the ultimate objective of insurance for all by 2047. What is the vision of Honorable Prime Minister, Government of India? We are working in that direction. So rural focus will be there for LIC.
And what about ULIP, sir? Because
ULIP, you see
that 166% growth,
yes,
which is a huge
ULIP last quarter, you see, we have shown substantial growth. That will continue because ULIP investors are different segment. They watch market, they take their own decision, they take their own risk, and that segment is to grow.
And you're going to bring in more product in the ULIP category?
It depends, depending upon our experience and feedback. Definitely some products will come in different segments, not only ULIP but other segments also.
Sir, your investments have given decent gains this year, and that also helped both policyholders and shareholders in terms of dividend and in terms of bonus which you have provided. What is the kind of investment that you are looking for FY26 into the markets?
Actually, it depends upon how market moves.
And what's your take on the market then? Let me ask you that way.
We are, as you know, contrarian investor. So even if market goes down, we also invest in good scripts, because that ultimately gains for all our policyholders. And current year, definitely last year experience, current year, let us see how market is moving. As per that, LIC will also take its action.
Sir, my final question, and I'm running out of time here. So bank assurance is something which you've been focusing on, and you have doubled the contribution coming from bank assurance. How do you see bank assurance channel for you? And do you see, there's always this reports and talks about there could be some regulations that will come in for bank assurance. What is your view on that?
You see, last year our banker channel did extraordinarily well. Last year more than 5%, 5.6% share of banker premium to total premium. And current year definitely further growth will be there from that channel. Banker channel will give further growth. So far as regulation and other things are concerned, those will not affect LIC, because our banker channel is very disciplined and very. So I don't find any challenge for LIC to promote any banker product.
But are you looking at some regulations coming from the regulator for the banker channel?
There may be something, government or regulator may decide something that when it comes we will be able to know.
Sir, as you leave on a very high note, to sum it up, VNB at the highest margin, highest bonus for the shareholders, highest single premium that you have done. You are also telling us that the VNB margins will head higher from here.
Yes.
And also the growth, APE growth will come back once this entire thing settles down, right?
Absolutely, absolutely.
Well, that was the management of LIC and their outlook for FY26. The stock currently roaring in trade today, up over 7% right now. But let's shift focus to another interesting company, and we are talking about Royal Orchid Hotels. In fact, to talk more about the outlook and the strategy, we're joined in by Chandar K. Balaji, the chairman and managing director of the company. Along with me is Mahima Vachrajani, who tracks the space closely. Mahima, now if you're talking about the fourth quarter results, we're seeing a revenue growth of 13%, margins stood at 23%, and net profit was down about 21%. Mr. Balaji, I want to understand from you your assessment of the fourth quarter and how FY25 was a year for you.
No, the year has been pretty good for us. Only thing is that there have been some ups and downs because we've taken up a lot of renovation work, particularly in the last quarter, because it was long overdue. So the main flagship hotel, we've taken up a lot of renovation work, which is, of course, not really capex or so. So we have done that, and I think it's going to give us good results in the future. I think most of the work is nearing completion now, and we've taken up work in Metropole Hotel, we've taken up work in our flagship Royal Orchid Hotel. And of course, what we are also doing is we have added a lot of team members to fuel our support our growth. You see, we added about 14 hotels in the last 1 year, about almost 963 keys last year. And this year we suppose probably another doubling that number to about 30 hotels. So for that, we have to hire a lot of new people, which have been hired in the last quarter or during the last 1 year or last half year. We've added that. So that is just to prepare ourselves for the future growth. And I think in the times to come, things should be really looking up.
Okay, just a quick update before I ask the next question to Mr. Balaji. Something that's flashing on your screen, the ITC block deal has been completed. The expectation was that it will be around 11,600 odd crores, which has now come at around 12,100 crores. So our sources reported earlier as well that the block deal has been upsized, and the net proceeds will be used to extend share buyback by around 200 million euros, and this is from the Bloomberg that we are getting in. British Tobacco overall has seen a block deal of around 12,100 odd crores. That's something that is flashing on the screen right now as well. All right, shifting focus again back to Royal Orchid. Mr. Balaji, hi, Mahima also joining in. Just wanted to get a sense of how the key operational metrics are for this particular quarter. What is the occupancy rate at right now? What has the total RevPAR been like? And overall, what has the ARR been like?
See, in our own hotels, we have done an ARR of 5,700 approximately against about 5,200 or so. The growth of about 9%. And in terms of occupancy, occupancy in the JLO, our own hotels have been flat, but the RevPAR has gone up by about 6%. But in the case of our managed hotels, ARRs have gone up by 12%, and occupancies has gone up by 2%. So there's a robust growth as far as both the segments are concerned. We have a large number of managed hotels, and of course, the managed hotels, because they're smaller hotels and not in metro cities, the ARRs are slightly lower than in the we call it JLO, means joint venture, leased and owned hotels. So there the ARRs are slightly higher. But I think both have grown. RevPARs have grown both in both the things, and which is the key metrics you really measure.
That's as far as where the key operational numbers are concerned. Mr. Balji, coming to your first point, you mentioned about there being a lot of cost incurred for future growth, which is there. Now, considering FY26, now that we are entering in FY26, what's your outlook in terms of some of these costs? Are they expected to stabilize? When are we looking at signs of normalization in terms of some of these key costs which are there? What's your outlook in terms of margins as well as revenue growth as well?
See, I would say that now only thing our new hotel is going to open, which will open probably in the month of June. And this is a 300-room hotel or 291-room hotel at the T2 terminal in Bombay. So that will stabilize in the Q2, and because it's just going to open in June, sometime in the June. So July, August, September, it should stabilize. So real, bump up will come. Will come in the month of October onwards. But that'll be a substantial jump, because that hotel will be a game changer for our company. And of course, the other projects are likely to be completed, like our resort in Bangalore. The expansion is going on. Renovation in Royal Orchid is going on. These are likely to be completed within this next 1 month. So I think the next quarter should see better results. That is starting from July onwards. We should see better results from these existing hotels also.
Your quick answer on something that you had mentioned in your call last time, that is you were planning to look for management contracts in Sri Lanka as well as Nepal. Any update there?
Yes, we are operating a hotel in Sri Lanka, and we're also operating a hotel in Nepal. And but of course, Sri Lanka and Nepal, their management contracts, they're not very large properties, but we are looking at expansion. There are discussions going on for some other contracts also, and we hopefully this year we should see significant expansion in these two markets also.
Okay, thank you, Mr. Balji, for joining us and sharing your outlook for Royal Orchids for FY26 and how the quarter and the year had gone by. But with that, we conclude the bulletin with a captivating campaign that is sweeping through social media. Check out this sponsored feature.
Today, the mystery gripping the nation just took a shocking new twist. And this time, it happened right in the heart of Bengaluru. In what commuters are calling straight out of a thriller, a digital billboard suddenly glitched and just for a few seconds revealed a flickering QR code. Then, poof, it vanished. But not before one sharp-eyed commuter stuck in traffic captured it on video. She scanned the code and it led to a website that has now gone viral. The site, a glowing red envelope. The message, this envelope delivers destinies. And at its center, a countdown timer ticking down to 12 p.m. tomorrow. But the internet is exploding with theories. This isn't an isolated event, folks. It all began days ago. A mysterious rap midair on a flight.
सुनो ना भाई, बहुत सारा पैसा है बनाना, अपनी सोई हुई किस्मत को है जगाना। लाइफ में मिलता है सिर्फ एक बार ये चांस। Learn how to make your money dance.
A man pointing passengers to a cryptic Instagram page.
अगर करना चाहते हो अपनी डेस्टिनी से डील, find on Instagram the red envelope seal. होगा वही wealth mystery reveal.
Then a woman in red satin handing out red envelopes to business travelers across India. Inside each envelope, QR codes that vanish instantly after being seen, leaving behind no data, just questions. The Instagram page tied to the mystery red.envelope.society now has over 250,000 followers with millions glued to every new post, every new clue. Will the red envelope mystery finally be solved tomorrow at noon? Or is this just the beginning of a much deeper rabbit hole? One thing's for sure, we are all watching. Stay with us, the truth may be closer than you think.
That's huge! That is a biggie! It's out of it!
गोल्ड ग्लास क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Hello and welcome to NDTV Profit. A very good afternoon to all the viewers. An interesting day of trade. I am Hiral Tatia, with me is Puneet Javeri. Puneet, clearly, 24,776 is what Nifty 50 is trading at. In the last 10 trading sessions, it's 25,000, which is becoming a crucial resistance level. We are seeing that up and down, but we're not really decisively able to close that 25,000 mark. And usually, whenever you see at that rounded off psychological level, that always becomes a concerning point, and that's exactly what you're seeing right now, 0.2% lower in terms of Nifty 50. Let's quickly pull up Bank Nifty on the screens as well and see what that is doing in trade, and then it will be followed by what sectoral indices are looking like. Bank Nifty also absolutely flat right now. What's leading? The defense pack continues to outshine. But currently, if you see in terms of other sectors, media is on a front footing as well. Energy is up in trade. PSU Bank Index trading in the positive. IT, surprisingly, pretty much on the borderline, followed by a real estate. But what's drooling under pressure is Nifty FMCG. That stock is down in trade, and it's mainly ITC which is pulling FMCG lower on the back of the block. That has happened. Auto is also down around 0.5 to 0.6%. Metals also trading under pressure. So that's with regards to what the sectoral picture is looking like. Let's quickly look at the heat map in terms of Nifty 50 counters, and then we'll see the contributors. BEL, I mean, that stock has been on a bull run over the last couple of trading sessions. HDFC Life, in fact, your life insurance players apparently are making some bit of a comeback. So I think that's going to be a story that we will be looking at as well pretty closely. Bajaj Finance, Bharti Airtel in the positive as well. Adani Ports trading in the positive, followed by Tata Motors as well as the Infosys. There you go. We said ITC 3% down take. Bajaj Auto, Nestle, Tata Consumers, Grasim, M&M. these are few of the ones which have been trading under pressure. Again, today is the 28th as well, so the entire auto pack also has been in focus, because in the next 2 to 3 days, you will have the auto sales numbers that will trickle in for the month of May. So that's going to be a space we should be watching out for pretty closely. Let's also pull up the VIX and see what the VIX is doing in trade, and because categorically, it's stayed elevated above 15. There you go. I mean, it's still at around 18.36. So there is that cautiousness that is prevailing in the markets as well. And I think that should be a cue why we are not able to cross that 24,000 mark yet again as well. But a lot of individual stock-specific action is what you're witnessing, Puneet.
Well, definitely, and let's pull up, see where the mid-cap and the small-cap index is as well. We've largely seen these two indexes actually outperform the Nifty, and today as well, up in the green as of now, while the Nifty is down in red by 37 points. Let's also look at the small cap and then move on to the BSE 500 as well, because we've again seen a lot of stocks react to news flows as well as earnings. Currently, MMTC is one of them. ITI also up almost 8%, continuing as positive momentum from yesterday. While we are seeing LIC, on the earnings as well, reacting positively, up almost 6.7%. And we were just flashing, is seeing the highest volume since February of 2024. On the loser side, TTA Prestige continuing its losing momentum since yesterday. The results came largely in the last hour of trade and was impacted because of that. Bosch as well, while the earnings were largely okay, it wasn't something to write home about, but company did report just about a percentage growth in profits, and that's largely because of a deferred tax. But some more commentary for FY26 will be something to watch out about. I also just wanted to pull up a couple of stocks in the EMS basket, see where Epack is doing, because company reported results yesterday, really strong number. They met their guidance for FY26. It's definitely come down though from the day's high of 405. And just want to pull up Avalon Technologies as well. The other one that's reacting very actively in trade today. There you go, almost 8.5%. And also let's look at a couple of defense names. Let's bring up DCX. The results weren't that great for the company yesterday. EBITDA is also down more than 20% and down 6.2%. On the other side, something like an Apollo Micro, that is seeing a very sudden spike over the last hour. And there you go, almost up 15% now. Results came a couple of days ago as well. Let's also welcome Gaurang Shah, who's the head investment strategist at Georgia Financial Services. Gaurang, thanks so much for joining in. A very good afternoon to you. Again, we've seen the mid caps and the small cap actually outperform the benchmark indices, and it's been a continuous momentum. Do you expect this to continue, largely backed by a lot of individual earnings from the mid cap and the small cap space?
Thanks so much, Puneet, for having me on the show. Thank you, and good afternoon to all of you all. So, our sense at Geojit is that there will definitely be a catch-up as far as the earnings is concerned. But the concentration of that catch-up, according to our sense, is going to be more in the mid-cap universe rather than the small-cap universe. And the fact of the matter is also that there are times when you have outperformance from the broader indices, mid-cap and small-cap. But when it comes to a downward reaction, the first casualty that you see is the small cap, followed by mid cap, and then the large cap. So I would urge viewers of NDTV Profit to be focusing on mid cap first, and in that mid cap universe, look at sectors rather than betting on anything and everything, because that's not how it's going to work out. So mid cap IT looks good. Mid cap banking and NBFC stock look good. Mid cap cement, power, defense-related stocks in the mid-cap looks quite attractive. And also mid-cap pharma. I think that would be the sectorial allocation as far as mid-cap is concerned.
Right, so that's the overtake in terms of sectors that will look attractive from the broader markets as well, and a lot of interesting ones that Gaurang has mentioned. But moving on, one stock that is pulling your FMCG sector lower right now is ITC. 3% kind of cuts coming in on this space, and we just have the details that have come in with regards to ITC BAT stake sale, which is British American Tobacco. My colleague Mahima is standing by with us to tell us more. Mahima, from what the details have come out with regards to the block that has happened, what's interesting is the expectation that Nuvama had is where BAT would get around 11,500 odd crores, whereas the number has come in much higher at around 12,100 odd crores. If you could contextualize this for us in terms of the expectation and what has happened and what's the next step now.
Right, so as you rightly mentioned, the block for ITC, that PAT selling its stake in ITC has now been completed. The expectations were that it will come at around 11,600 odd crores. Then there were sources telling that this might, be upsized and could also go to around 15,000 odd crores. But the final block deal has taken place at around 12,100 odd crores. In terms of this proceeds, the ITC block will be used to extend share buyback of around 200 million pounds. Now, in terms of the details with regards to this particular block deal, the price deal was set at 400 per share, which was a 7.8% discount from its yesterday's closing price. The current stake of BAT in ITC is roughly 25.4 odd crores, and even in 2024, BAT had sold around 3.4% stake in the company for around 17,400 odd crores. Now, inflows due to this stake sale, where IIFL Capital expects inflow of around $96 million owing to this particular stake sale. The stake sale will lead to increase in free float adjustment in the Nifty as well as the Sensex. And Nifty related passive flows will see the overall action on 27th of June, and Sensex will see this on June 20th. Now, Nuvama's expectation related to this particular stake sale, post the stake sale, they're expecting ITC stock to bounce back post the deal. A bit negative overhang in terms of a structural change being considering the entire stake sale, and this could have some kind of overhang, but the stock might bounce back. They do not expect BAT to reduce stake in ITC hotels for the next 2 to 3 quarters is what they're saying, because of the luxury exposure that this particular company has overall in the hospitality space. Lastly, in terms of ITC business, they expect margins of ITC FMCG business to start recovering from Q2 FY26. They are also expecting margins to recover in the paper business as well. They're expecting second half of FY26 to be much better than that of first half, and in the cigarette business, decent volume growth is expected, though less than that of Godfrey Phillips. Lastly, how will this entire thing change in terms of the governance for ITC? BAT will not be able to block any kind of special resolution going forward, because their stakes will come down below that 22% threshold, and before this, BAT has only once blocked special resolution for ITC. So this is the overall view as to what has happened with ITC with regards to where the block deal is concerned.
Mahima, just stay with us very quickly. One of the things that you mentioned is that BAT will not be able to block a special resolution. So what is the threshold for that? Because currently the assumption is that the stake will come down to around 23.14. Just correct me if I'm wrong.
Right, so because the block has been upsized, the expectations were that the selling would likely be around 2.3%, but that has been now increased. So we'll have to wait and watch out for as to how much of a percentage stake sale has happened. And generally beyond, below that 22% mark, they will not be able to block any kind of special resolution that ITC wants to take. So that's the overall update. So if it's below that 22% threshold, they will not be able to take the block the special resolution.
Understood. Thank you, Mahima, for that clarification as well. In fact, Gaurang, let me come to you. British American Tobacco, how big an overhang will this be in terms of further stake sales? And how are you looking at this entire aspect, taking into consideration that the stock is under pressure? Because this does lead to some bit of a free float adjustment as well on Nifty and Sensex, from a stake sale perspective.
So, Hiral, this is not the first time that any large promoter or a large investor has sold out and exited a particular company. We saw yesterday Gangwal family. I think it was the fourth instance where the exit happened. Before that, we also heard from companies like Whirlpool, a parent company, exiting. So this exit is not going to impact the working of the company. It may have a momentarily hangover in terms of maybe a day or two. Does this impact the working of these companies where the stake sale is happening? I don't think so. In fact, I would look at it from the other side. That is, a glass is half full. If somebody is selling it, then on the flip side, somebody is buying it, Hiral. So I would not read too much into it. Since we are discussing, it's prudent to give a disclosure that we have a positive fundamental coverage on ITC from a long-term point of view.
Got that view, Gaurang. But another stock that's in focus is LIC on the back of its Q4 earnings, which saw big while there was the VNB margins which was down, the stock is reacting very positively. Let's get in Harsh to bring us some more perspective of what's giving that boost to LIC today. Harsh.
Well, it's clearly the margin number, Puneet, which seems to be positive. When you're looking at it over a YOY basis, margins have improved around 150 basis points. So a better margin picture that we are seeing. Also, the company guided in the interview to NDTV Profit for a further margin expansion of around 200 to 300 basis points. So that's the other key piece, that margins will continue to basis points. So a better margin picture that we are seeing. Also, the company guided in the interview to NDTV Profit for a further margin expansion of around 200 to 300 basis points. So that's the other key piece, that margins will continue to expand in an otherwise difficult margin environment. Non-par is the larger focus. So while top line growth hasn't really come through, or APE growth hasn't really come through, that's also in part due to surrender value, and likely that will reverse in FY26. That's the other positive guidance that's come out as part of the NDTV Profit interview. The couple of other pieces is that there's going to be a larger focus on profitability, obviously, because of that margin outlook. And margins have done very well for themselves over the last 3 years since its listing in May of 2021. LIC has really doubled down with regard to the way margin trajectory has played out for the stock. I apologize, since its listing in May of 2022. When overall you're looking at the valuation picture as well, around 7.7 to 7.8 lakh crore in terms of embedded value that LIC is currently worth. You're seeing market capitalization which is a shy short of 6 lakh crore, and therefore there is plenty of scope for a re-rating on the embedded value if growth were to kick through where LIC is concerned. All of that positivity playing out on the stock, as well as the way analysts are viewing it. What analysts are saying is, while it's a subdued result, the target prices aren't revised at all. They hold, and there's a very strong upside to how they see LIC playing out.
Well, thank you for that, Harsh. Gaurang, in terms of LIC as well as what's happening in the insurance space, we've seen a sustained amount of volatility there in earnings, but now seems to be turning the corner. What's your view specifically on LIC and anything on the private side as well? Do you have any topics?
So first, let me answer your second question. We have coverage on LIC, HDFC Life, ICICI Prudential and SBI Life. Now, this change in earnings is a result of the thought process of individuals like you and me in terms of approach towards term insurance. Earlier, before COVID, the thought process was you need to take a policy so that you can save something on tax. Post-COVID, the thought process has taken a major flip with respect to if something happens to you and me, then if you have a term policy and a decent sum assured, then there is something that is left behind for our dependents if something has to happen to us. This is a major shift and change that is happening, and the millennials have now realized it. And our sense at Geojit is that in the next maybe about a year or maybe a year and a half, the run rate of new insurance premium is going to only increase thanks to the higher sum getting assured and of course the kind of settlement rate, etc., etc. My only request is that if you decide eventually to invest in insurance related companies, then please have a time horizon of 2 years plus.
Right, 2 years plus is the kind of timelines that you should be watching out for with regards to insurance companies, but a smart move coming in with regards to LIC is what you're watching out for. But moving on, from the broader markets, two stocks that we're going to discuss is DCX and Bosch. Praneeth will take us through Bosch. But in terms of DCX, if you pull up the counter, the revenue and the EBITDA is down, and that's the reason why you're seeing cuts of around 2.8% coming in there on Bosch. Sorry, on DCX, it's down around 6.5%. Now, what has hit revenue is the market headwinds as well as the kind of global uncertainties that we've seen. The raw material and the employee cost has been higher, and that is what has impacted the EBITDA as well as the margins this time around. And they're sitting on an order book of around 2,855 odd crores. Revenues, 26% downtick. EBITDA, which is down around 73%. Net profits have seen a dip of also 37 odd % this time around. In fact, let me take a quick question with Gaurang. Gaurang, your view with regards to DCX?
Well, I think sector specific, Hiral, you could have some problems in terms of earnings disappointment, maybe a 1 or 2 quarter. To expect, every quarter to give you a run rate of 15-20% earning growth is not advisable. So maybe because of certain headwinds and constraints, there has been a disappointment in earnings, but the sectorial outlook remains positive.
Got the view, Gaurang. But the other ones also, which is in trade, reacting in trade today, is Bosch. Now, while when we started this morning, it was largely positive. It's turned negative right now, down almost 2.9%. And essentially in the results, while the company did report a decent set of numbers, revenue was up 16%, so was the EBITDA, but the profits was down 1.9% and margins were almost flat, and that's largely because the company's total tax expenses have doubled to 224 crores versus 96 crores, and that was essentially the growth in revenue, and hence that has come as a drag. The other aspect is that the consumer goods business of the company, that's roughly about 500 crores in terms of revenue, so that's 10% of the quarterly revenue. That's also not been growing for a while now. It was up only 4%, while the automotive revenue continues to grow at 18% in this particular quarter as well. 4,000 crores is what the number was. Overall, the other key aspect in this particular result was that the energy, building and technology vertical of the company also declined by 8.7%, and that's coming in the presentation just an hour ago. And since then, we've seen that continued negative momentum on Bosch. But a stock that's, let's put out the 1-year chart actually of the company, because it's done well for its investors, but it's a very expensive stock in that sense. So definitely some aspect to look at. Let's look at the 1-year chart also very quickly. Not going anywhere, just about 1.5% in terms of returns as well. The other ones which I want to highlight is Bharat Dynamics, and there was definitely issues for the company in this particular quarter in terms of execution. It's almost recovered a lot of its losses. Let's look at the days low as well. While the revenue almost up 100% in this particular quarter, the EBITDA is actually just up about 4%, and margins have actually halved to 17.9 versus 36% on a YOY basis. Net profit subsequently is down 6% as well. Now, one of the key aspects was delays in execution, and that's impacted in this particular quarter, but largely expecting it to recover from the next couple of quarters. And I think that's one of the key reasons why Bharat Dynamics has recovered in trade. And we saw similar action in terms of price performance for something like a Bharat Electronics as well. The guidance was missed for FY25, but the company's already gotten orders in April and May as well. So Gaurang, let me come to you on this. Specifically, let's start first with Bosch. A stock that's expensive, but do you have any view on Bosch earnings as well as anything in the auto ancillary space? Any top picks for you?
So we have coverage on Bosch Limited. We have a hold recommendation. Other than this, we have coverage on CI Automotive and Uno Minda. We believe if auto sector has to do well, auto component, tire and battery manufacturing companies will also contribute to the growth. Bosch relatively is a very significant player in the auto component space because it makes very crucial components as far as the safety of the vehicle is concerned. Parent company Bosch AG has a very good support, and I had read a report wherein the parent company is having a view to make the Indian counterpart a base and a hub for manufacturing to the rest of the world. So we have coverage from a long-term point of view, continue to hold. Sorry, what was the second question?
Second question largely on, you did answer a little bit on defense, Gaurang, but Bharat Dynamics, do you have a specific view?
So, let me give you a purpose. Like I said, get invested in defense-related companies. Please have 3 years, 5 years plus horizon, because these are the companies that make components for the armed forces in India. Whether it is Air Force, Navy, Army, Border Security Force, or Indian Coast Guard, the components that they make, the ancillaries that they make are very complex in nature and high technology oriented. It takes times to make a prototype and get an approval and then get onto the mass scale production. So that's the kind of time horizon you need to have. While Bharat Dynamic, we don't have coverage, but it's one of the stronger players. BEL, BHEL and Cochin Shipyard are the ones that feature in the defense sectorial investment idea.
Right, so that's with regards to Bharat Dynamics as well, and BHL was another one that we spoke about. But let's look at a few of the other names. You have ITI as well as Techno Electric. Let's pull up both these stocks and see. ITI, strong move, 7.5 to 8% is the kind of up move that you're seeing on this one. If you can just have a long-term chart also of both these counters. Techno Electric also at the day's highest levels with gains of 13 to 14% coming in there. If you can just have a longer one, I mean, ITI 11%. So you did see a major spike that did come in the month of January, but from there it's cooled off pretty much. So it's going to be interesting to understand what you should be doing with this counter. And if you can have a longer term chart in terms of Techno Electric as well. A similar scenario from January onwards, it's receded again, trying to see that upside, but 30 to 33% is the kind of returns that you've seen in the last 1 month. My colleague Varsha is standing by to decode both the earnings for us. Varsha, what are the Q4 earnings indicating, and anything that you've picked up in terms of their FY26 commentary?
Yeah, so thank you for that. So talking about ITI, good set of numbers, you know, the loss narrowed down due to other income that the company has seen. Now other income increased 3x. One of the reasons why the losses have narrowed down. Now cost of raw material, if you see, has decreased by almost 19%, and the inventory clearances have led to narrowing of losses. Finance costs have also decreased by 25%. Then on the list is Techno Electric and Engineering. You know, good set of numbers again there. The EBITDA margin uptick that you're seeing is led by lower other expenses, and other income of course aided net profit for the company. So just to speak on the 4 numbers, revenue was up 85%, EBITDA was up EBITDA was at 126 crore versus 54 crore, margins were at 15%, and net profit was up almost 74%. Last on the list is Thwini Engineering, wherein again if you see strong performance was led by growth across their diversified business segments, and which has led to uptick in revenue and of course uptick in EBITDA as well.
Right, thank you Varsha for getting us the details. Gaurang, a quick one in terms of ITI, Techno Electric, any views that you have on any of these, and Thwini Engineering as well?
Well, why the relative performance over the next couple of quarters is likely to improve, Kiral, but I won't be in a position to give you a specific buy, sell and hold on either of the two companies.
Okay, so that's with regards to the 3 companies that you're watching out for. No recommendation coming in from a Gaurang. But thank you, Gaurang, so much for joining us on the show and sharing your views as we speak. But moving ahead, you know, let's jump on to a NDTV Profit exclusive. Now, the Federation of Indian Chambers of Commerce and Industry has been advocating for streamlined regulations, and this is mainly to go ahead and facilitate the capital market operations for listed companies as well as the other participants. What does this mean, and what is the outcome from here on? My colleague Charu gets us all the details. Charu, over to you.
Hi, so we must understand a couple of background points here, that recently the SEBI chairperson Tuhin Kanta Pandey met with a lot of industry associations, which included the industry body FICCI as well, and they had a meeting with around 50 odd members, and they spoke about optimum regulations, streamlining the norms that govern the listed companies, and you know, how to rationalize them more, make them a little more relaxed and easier to follow. Now, to look into what sort of regulations they really pointed out in terms of relaxing, and sent out discussion papers to SEBI. So they want some relaxations in listing obligations and disclosure norms, changes about takeover norms, delisting conditions, as well as promoter lock-in requirements for listed companies, and rationalizing timelines for regulatory approvals. And this is something that is being done in a phased manner. So regulator is receiving a couple of discussion papers from the industry body. First one has already been sent, second one could be sent this week, and the rest might follow. Apart from this, we must also understand that the regulator has recently also met other associations, including the ones for investment advisors, research analysts, AIFs as well, and he himself in an interview to NDTV Profit spoke about optimum regulations. So there is a lot of A's in doing business for several market participants likely very soon, and let's tune in till the board meeting at least to see what happens.
Well, thanks for that, Charu. But another big exclusive now, Elon Musk's Starlink is ready to beam in India, and my colleague Aishwarya has the details of the pricing and capacity going forward. Aishwarya.
Well, Starlink is preparing to soon beam into India with a big bandwidth, a D2C push and premium pricing as far as their device pricing is concerned. What we're picking up from our sources is that in phase 1 of InSpace's approval, Starlink will begin beaming about 600 to 700 Gbps or gigabits per second kind of satellite capacity over the Indian market. Now, this beaming capacity will support or enable traffic in one go or concurrently about 30 to 50,000 subscribers over a certain area. By certain area, we mean an area approximately the size of any city or urban cluster. The projected capacity is expected to rise up to 3 Tbps by 2027, according to our sources. This is, of course, subject to regulatory approvals, which are still pending, and Starlink has not unconditionally agreed to all of the terms of the LOI as well, what we're learning from our sources. Now, they also have plans for 2 to 3 Earth stations in India. The sites have already been identified and 9 gateways have been planned per site, is what we're learning. Apart from their B2B business, Starlink is also planning to introduce, still mulling and having conversations and discussions around the D2C, direct to customer model in India. D2C services will target premium users or premium pricing. As far as the pricing of the devices is concerned, that is expected to be anywhere in line with the global pricing, which is about $250 to about $600. That means about 20,000 rupees to 50,000 rupees per device. They have devices like the standard Starlink kit and also Starlink Mini. Those could be in the starting range, and for consumer or users, common users, the business kits could be upwards of 50,000 is what we're learning. Now, according to DOT sources, Starlink's global licensing head, Piramal, had met with DOT officials earlier this month to take care of some regulatory approvals and signing off some of the papers that are related to the GMPCS license. DOT is in process over and after this of securing bank guarantees from SATCOM companies, and the license is expected around mid-June is what we're learning from our sources, and Starlink is currently reviewing the terms under India's new SATCOM norms. We've written to InSpace as well as Starlink, but no response from them as of yet, but we'll keep you posted on the developments further as far as Starlink's India debut is concerned.
Well, thanks for that, Aishwarya, but it's time for a very quick break. Stay tuned to NDTV Profit. We have a very couple of interesting conversations live on the other side. Heela's going to talk about Hindustan Copper as well, so do stay tuned.
गोल्ड प्लस ऑप्टिमिस्टिक रिफ्लेक्टिव ग्लास लगाओ, धूप की गर्मी को दूर भगाओ और बिजली का बिल भी बचाओ।
The markets move fast,
and so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
the answers you need straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
Markets trade flat, Nifty trades in a tight 150-point range, hovers around the 24,800 mark. Sectoral action mixed. Nifty defense continues the rally, leads gainers. And LIC shares buzz on trade with gains of almost 7%. Whilst the insurance giant has missed its Q4 estimates, growth in VNB margins and contribution of non-par business is what has enthused the street. And DCX Systems, on the other hand, is trading with cuts of over 6%. And this is because your profits in the fourth quarter have gone down by 37%. Margins have contracted as well. Sources tell NDTV Profit that valuation of one of the most anticipated IPOs, NSE, surges to 5.8 lakh crore rupees. That's an NDTV Profit exclusive. In another NDTV Profit exclusive, Elon Musk's Starlink is ready to beam in India. The company is poised to kick off phase 1 operations in India with 600 to 700 Gbps of satellite capacity. Welcome back. You're watching Profit Buzzers on NDTV Profit, and I'm Hiral Dadia. But very quickly, let's just pull up Nifty 50 as well as Bank Nifty to see what's happening, if anything changes in the last half an hour that we've been discussing as well. There you go, pretty much now on the borderline in terms of Nifty 50. We are seeing cuts of around 0.1% coming in there, but it's trying to inch higher. Let's see where we end. And apart from that, let's just pull up Bank Nifty on the screens as well and see what that is doing in trade. Again, it's trying to recover the lost ground, and nearly at the day's highs, we hit a high of 55,521. So we're just around 40 points away from the day's highest level. So it's going to be interesting to see if Bank Nifty comes to the rescue as well in terms of markets and helps Nifty 50 retrace those 25,000 levels back in trade today. But let's shift focus to one of the metal companies that has been in focus on the back of earnings, which is Hindustan Copper. Let's pull up that one on the screens and see what the stock is doing in trade. It's cooled off from the day's highest levels in spite of posting the highest ever revenue. 1.7% is the kind of gains that you're seeing on this counter. In fact, let's welcome in the management. We have Mr. Sanjeev Kumar Singh, Chairman and Managing Director at Hindustan Copper, joining in. Mr. Singh, good afternoon and welcome to the show, and a pleasure to speak to you as always at NDTV Profit. My first question coming to you is, firstly, what has led to this kind of a number in terms of top line? Is it the pricing or is it the improved production? And will this continue from here on?
Yeah, I'll just sum up. Strong prices, operational efficiency, and then there is a government support also, I should say, and low TCRC prices globally. So all these have helped us to grow, I should say.
Okay. Moving from there on, now if you have to talk about the overall mines, which is Jharkhand mine, which is Rakha and Chapri, with a combined capacity of 3 million tons per annum, they are set for auction in October 2025. So what is the status and what would this mean for Hind Copper?
Ma'am, they have already been auction. They have already been the auction part is complete, means from the Hindustan Copper point, and the JSW has been awarded that contract, I should say, and we have already signed a MSA document in the month of January, and now just we are waiting for some clearances which are expected in 3 to 4 months, and then they have in fact already started the pre-mining activities there in Jharkhand.
Okay. And what about the smelting and refining operations at Gujarat and Jharkhand? Because they were the ones which have been suspended since 2019 due to business constraints is what we understand. And if you have to look at Taloja, which is in Maharashtra, the plant is also limited to third-party activities, which is also restricting the downstream output. So what is the update on that front?
The status as of Ghatshila plant is that it's closed, but we are studying it. DPRs or other things are under preparation, but there are some other issues also. We'll look into once the mines. Our main focus is on mining operations. When we generate the ores, then only we can start these. So our focus as of now is presently on opening up of mines and increasing the production of Hindustan Copper.
Okay, so that's the focus for the company. And if you could help us understand with regards to MCP, which is the Malajkhand copper project, that has been transitioning to an underground mine. This will, actually ensure an increase in ore production capacity from 2.5 to a 5 MTPA. Where are you on this one?
Ma'am, I'd just like to add 2 lines to it. It is the flagship mine of Hindustan Copper, and it got converted from open cast mining operations to underground seamlessly. This is very important, seamlessly, without stopping a production there. And this year, 24-25, that 2.73 million tons, which was the production of Malajkhand, was exclusively from underground. So this is one of the most rarest of the feat which Hindustan Copper has achieved, and will grow. This mine will grow up to 5 million tons within 29-30.
Okay. Apart from that, if you have to see in terms of the consumption, the anticipation is that because of the Chinese usage decreasing, that will drop. So how is Hindustan Copper looking at it? How are you planning to manage your inventory levels if there is a potential surplus market, and are there risks of inventory built up?
Ma'am, in fact, I would like to mention that we are able to serve only 5% of the needs of this country. So as Hindustan Copper doesn't have any issues on that.
Okay, so again, domestic consumption is what you'll be focusing on. Apart from that, in terms of the kind of prices that you're seeing, what is the outlook for the next 12 to 24 months in terms of copper prices? Because your International Copper Study Group is indicating a considerable global copper surplus for the next 2 years. And as we know, the domestic prices are linked to LME prices as well. So there is a major global impact that comes in terms of copper prices. How are you reading the entire situation?
As of now, the copper prices are very strong, and you have seen it within the last 3-4 months also. They are hovering around $9,500. I expect them to remain the same because the demand of that green energy, AI, you just see infrastructure everywhere. Whatever you talk, you cannot achieve that without copper.
Okay. Apart from that, if you have to look at the other aspect in terms of businesses, the capex plans. Now, how are you looking at capex from here on? Because your model is shifting towards a leasehold model. So what will that capex look like, and what's the utilization like?
Ma'am, as far as capexes are concerned, since we are growing a lot, so it is a huge capex. This year we have already planned at least 350 crores. I am talking at least 350 crores. It will go beyond that also. Big concentrator plants are going to come at Malajkhand. Even at K3 units, we have planned augmentation of the concentrator plant. At Ghatshila also, we are augmenting the concentrator plant. So it's a huge expansion, ma'am. We need a lot of capex. So this year we have planned at least 350. We'll go beyond that.
Okay. So that's with regards to where the capex plan goes. So taking the capex that you're looking at, what's your outlook looking like in terms of FY26 and 27?
Ma'am, will definitely do. I can't speak of the figures, but you just see the trend of last 4 years. We'll try to maintain that.
The last 4 to 5 years kind of growth is what we should be looking at to understand how FY26 and 27 will look like as well. But thank you, Mr. Singh, so much for joining us on the show and sharing your views. So that's the management of Hindustan Copper. A completely shift in terms of a business model goes is what they've started looking at, wherein from a self-owned mine business, they are looking at a lease business, and that is what is actually leading to lower capex, lower operational expenses, and that's what is looking at in terms of the margins as well. So a smart move coming in terms of Hind Copper, the stock seeing gains of 1.5%. Another stock in focus today is Aarti Industries. Let's quickly look at that one on the screens. UBS has in fact given it a double upgrade, that the stock is trading at the day's lowest levels as we speak. If you see in terms of the target price, it's 625 and the current market price is around 478. What they've indicated is there are strong growth initiatives which are absolutely strategic in nature, which is making them positive. And the cycle is expected to see a recovery as well from here on. Additionally, the focus on market development and long-term client relations is something which is positive as well. And they are expecting an achievable EBITDA guidance. The guidance that the company has given, and they're forecasting a 25% CAGR growth in FY25 to 28. The energy business MMA is expected to ramp up gradually, is what UBS is indicating. So probably a recovery is on the horizon. What's interesting is a double upgrade on that one, target price of 625. That is maintained as well on our Aarti Industries. In fact, this is going to be a sector which we will be focusing on as well, where Varsha will be getting us more stuff in terms of what's happening across the industry later on during the week. But that's with regards to Aarti Industries. Another stock that is in focus as well that we should be putting the spotlight on is a Cummins India. It's the last leg of earnings right now. Cummins will be reporting numbers today, and ahead of numbers, the stock is seeing gains of nearly 1%. Let's understand what is on the cards. The margins are expected to be under pressure for a Cummins India. If you have to look at the standalone business on a year-on-year basis, revenues are expected to improve by around 18 to 19% at around 2,693 odd crores. If you talk about the profit number, a 15% decline is what you're seeing. And the margins are expected to be under pressure at around 19.4% versus a 24%. Now, why the decrease in terms of margins? Firstly, there has been a strong base effect on the back of a one-off that was seen in the fourth quarter of FY24. Secondly, the margins are contracting on the back of lower other expenses in the fourth quarter of FY24. So the other expenses component probably will be higher this time around. And there is higher competition in few of the offerings as well that is actually putting some bit of pricing pressure in their product portfolio. So these are the factors that could be impacting the margins this time around with regards to where Cummins India goes. Let's also understand the key expectations. The revenue growth that we are seeing versus the other parameters which are declining are on the back of domestic as well as the export recovery. And you're expecting a 30% growth in terms of exports for a Cummins, and this is again coming in on a lower base. The management commentary with regards to the pricing outlook going ahead and the power gen segment is absolutely going to be crucial to understand the roadmap in terms of where FY26 goes. So that's with regards to where Cummins India goes. But moving on, again, let's shift focus to the hospital space once again. In fact, Varsha is with us as well. Varsha, we'll be joined by the management of Yatharth as well, but a quick update in terms of what has happened in terms of the numbers and what are the key talking points.
Yeah, sure. So talking about Yatharth, let's see how the Q4 has panned out for the company. If you see the revenue growth, company has seen the revenue growth, which was led by growth in occupancy and RPOP, that is average revenue per occupied bed, which is a crucial thing when it comes to hospital segment. Now, the EBITDA margin contraction that you're seeing is led by operational losses at the Greater Faridabad unit, and adjusting for Faridabad hospital, EBITDA margin is at around 27%. Now, profit growth impact that you're seeing is led by increase in depreciation. If I were to talk about occupancy, there was a good growth when it comes to occupancy. Occupancy was at 61% versus 57% last year. Good growth in RPOP. So overall, even capex plan also, if you see, they plan to incur 300 crores when it comes to expanding their facility. But to give us the outlook when it comes to 26 and for future years, I am here joined by Mr. Yatharth Tyagi, who's the whole-time director of Yatharth Hospital. Welcome, Mr. Tyagi. Good to have you here. I just wanted to understand, the margins were impacted due to Faridabad unit, which we now when are you expecting your normal margin to come back, number one, and from there can they go up? Because considering the 700 beds that gonna be go live in FY26, will there be more drag when it comes to EBITDA margin?
Hi, thank you for having me. So if you look at the EBITDA margins for the whole quarter, there has been a marginal dip. It's not a big change in our EBITDA margins, and this is as per our expectations because when you start new hospitals that you talked about, when we started Greater Faridabad, so it was expected to drag down some margins, and however, if you talk about the latest month in Q4, that hospital has become EBITDA break-even on month-on-month basis. So now going forward, as we enter the new financial year, the losses at Greater Faridabad will stop in terms of EBITDA, and it will start contributing towards the EBITDA positive there. As you rightly also mentioned, that we are starting 2 new hospitals, one in New Delhi and one second hospital in Faridabad. These 2 hospitals will have 700 capacity combined. So yes, there will definitely be certain drag on the margins of these 2 hospitals, but the margin drag that Greater Faridabad had for the financial year 25 will not happen for financial year 26. As well as our other 2 hospitals like Noida Extension and Greater Noida, occupancy ramp up is much more expected in those 2 hospitals, which will be upwards margin of even 27 to 28% in those 2 specific hospitals. So overall at the group level, with the 2 new hospitals also dragging down the margins, we feel the margins that we have seen in Q4 would be somewhere around that would be right estimation for the upcoming financial years ahead.
Got that. So 25% of margin is what you are expecting when it comes to FY26. Okay. Now, you've seen good growth when it comes to ARPOB. Now, what's the outlook there? Can you quantify any sort of growth that you are expecting going ahead?
We feel the ARPOB growth, we have constantly maintained around 8 to 10%, yearly for last 3-4 years. And this is an area where we still have a lot of room to grow, because there are certain key treatments that, are huge ARPOB boosters like oncology, cardiac surgeries, as well as, international patients. Remind you that one of our hospitals, which is in Greater Noida, is the city which is opening Asia's largest international airport. That hospital is just 20 minutes away from the upcoming airport. So a lot of international patients also expected in that region. So overall, all these factors do contribute to a higher ARPOB, and we feel that going forward, we should continue to maintain the growth momentum in ARPOB as well. In fact, if you look at the ARPOB, the one more key factor that we feel the ARPOB is bound to increase is the change in our payer mix. As a contribution of government business will go down, more private insurance and cash, that is self-pay patients share increases in the pie, which are higher rates than government government businesses. So that will also ultimately help our ARPOB to grow and sustain that momentum in the years ahead.
Yatharth, good afternoon. This is Hiral on this side. As you're talking about the average revenue per occupied bed, which is the ARPOB, how much of it is driven by advanced surgeries as well as inflow of international patients, to understand how well medical tourism is working in the country?
See, I think if you talk about an average ticket size of an international patient for this same surgery of what a domestic patient would land, it would be around 30% higher than the tariffs when it comes to international patients and domestic patients. But it is not just those like-to-like tariff increases. It is also international patients which come to India usually come for very complex cases, and these come for high ticket size themselves. So like kidney transplants, liver transplants, and bone marrow transplants. An average ticket size of these transplants is somewhere around 15 to 20,000 US dollars, and a lot of markets of international tourism in India caters to these specific treatments. So anyways, if you're doing international patient treatment, you're doing these high-end treatments, so that also does significantly boost the ARPOB that all the hospitals operating in the regions have.
So that's with regards to the average revenue per bed. Now, if you have to talk about bed occupancy as well, yes, it has improved specifically with regards to your Noida as well as the Jhansi Orcha hospitals overall. But from here on, what is your target in terms of improvement with regards to occupancy at all of these levels? And if that happens, how does that benefit your top line? What's the kind of revenue addition that you're expecting to see?
See, I think we have constantly grown our occupancy levels if you look at for last 3 years, and not just grown at occupancy level but even grown on increased bed capacity. So 2 years ago we used to have a bed capacity of 1400 beds. Today, with these 2 new hospitals starting up in Delhi and Faridabad in financial year 26, we will be counting our occupancy on 2300 beds, and even then we have shown significant growth in the occupancy rate is concerned. And we feel that especially our Greater Noida and Noida Extension hospitals, which are somewhere around 60-66% of occupancy, these two specific hospitals can touch 75% occupancy over the course of next 2 years. Ultimately, overall group level occupancy will also be boosted by these factors, and ultimately this leads and contributes to the yearly revenue growth. For last 3 years, company has constantly delivered upwards of 30% growth year on year. This time even in Q4 year on year growth is 30%. So we feel that with the increase in our bed capacity helping us at a higher occupancy, increase in our ARPOB, this momentum should continue, and that's what we have done for last 3 years in the past, and this momentum should be continuing for a few years ahead also.
Okay, so Yatharth, to understand now from here on, with your average revenue, with occupancy, the next important aspect is how are your expansion plans looking like? And to what is known so far is a 700 bed capacity is what you're going to commercialize in this quarter. Now, that's the target where you will take it to 3,000 beds in FY26 itself, correct? What's the capex plan over the next 3 years? What is the addition that you're looking at, and the amount that will go in terms of this expansion, and the funding plan?
So, this FY25, we have incurred a capex of upwards of 300 crores. In FY26 also, a similar capex would be incurred as far as our existing hospitals are concerned. But, we have always maintained in the past as well that each year, company would like to have one inorganic acquisition. That's what we have done for last 3 years. Each financial year, we have acquired a hospital. So, 300 crores plus any more acquisition that we do in the upcoming financial year would be the total capex for the year. The company is, well positioned with a strong cash today on our books of close to 500 crores, and we are also debt free. So we have enough, in terms of.
Yatharth, sorry to interrupt, but I understand well funded from here on, but from the 300 crores that you will incur on existing capacity facilities, right? If you have to look at one acquisition per year, what is that approximate quantum going to look like in terms of capex? Because again, we're talking then about brownfield or greenfield here. And 2, what is the number of bed additions you're going to see in the next 3 years? So say, for example, if you're going to close FY26 with 3,000 beds, what is FY27 and FY28 going to look like?
When you're acquiring a new hospital within the Delhi NCR, the way we look at it and a lot of other hospitals look at it, the per bed ticket size usually for a hospital here is usually 1 crore per bed. That's the minimum. When if at least when you're trying to build a greenfield project, excluding land, is what I'm talking about. So we have always had hospitals which are above 250 beds, 300 beds. So that's the minimum of 300 crores should be going for one hospital if we have to add be it a greenfield and even the brownfield expansion that we are doing in our existing 2 hospitals in Greater Noida Extension. That will also capacity will come in the years ahead. So that's as far as the roughly ticket size of a hospital acquisition is concerned. Your question on the added bed capacity, we, as I said, that each year at least 300-400 beds acquisition would be done. So that would take in next 3 years at least 1,200 beds coming from inorganic acquisitions, along with the 450 bed addition of a brownfield that is expected to commence within 2 years. So that's how we are shaping up in terms of total bed capacity is concerned.
Right, got that. Yatharth, I remember last time we spoke, you said that you'll grow at 30% for FY25, which you have surpassed that guidance. But now, what is the target which you have set for FY26? Because for FY25, you have grown at like 35 to 38%. Will you see the same growth, like 35 to 38%, or the growth will tamper to 30%? What's your outlook?
So I think overall at the group level, we have grown 30% when it comes to FY25 compared to 24. And as I earlier mentioned that, this is what the company has delivered over the last 3-4 years. And we would look to deliver the same growth. And this growth is possible because of the added capacity, increase in our RPOP, increase in our occupancy levels. So we feel this growth momentum should continue. And we should also add to a bed capacity within the North India region, within the Delhi NCR markets. More beds should be added by Yatharth hospitals.
Got that point. Also, Yatharth, what is the status when it comes to the income tax case that we had? When are you seeing this to get resolved?
So there's a big positive development that happened in the income tax matter as far as the latest quarter is concerned. In fact, just a few weeks back, we have concluded the large part of the income tax audit for a subsidy AKS, which contributes to 40% to the overall group's revenue, where a marginal tax demand has occurred, and the company would be doing that. And this is as per our line that we did not see a major or a significant financial impact from the matter as far as the company is concerned. And with this moving forward now, we are quite hopeful that for the remaining company as well, the matter should be settled, and we are quite hopeful that before the end of somewhere this calendar year, the whole matter should also be resolved, and that is as per our expectations and timeline. Any matter takes usually 2 years to close when the audit starts, and we are quite on the timelines as well as that matter is concerned.
Yatharth, we are short of time, but a quick response to this one. So would it be right to say a top line growth of around 30%, taking into consideration the CAGR that you've given out earlier in terms of FY30, plus hospital acquisition annually is what you're targeting, and we'll see margins stabilizing in that 26-27 kind of a band by FY30, because the projection is around 950 odd crores in terms of EBITDA and a 700 to 750 odd crores in terms of profitability. And I'm talking about FY30. Is that something that you're aiming for?
I think the factors of the revenue as well as EBITDA are close to what you have mentioned. As far as the margin levels are concerned, we feel the Q4 EBITDA margin of somewhere around 24.5% would be a right estimation, to go ahead for the next few years. We would like to be, because, we are aggressively adding capacity. So, a new hospitals will incur EBITDA losses, and that's what we're prepared for. And this is as per our expectations going forward.
Right. So that's going to be an interesting one to watch out for. Thank you, Yatharth, so much for joining us on the show at NDTV Profit. An interesting one, Varsha, coming in here, and I think that's going to give you food for thought in terms of analyzing what hospitals are doing in terms of their capex plans, the occupancy, and the kind of brownfield and greenfield expansion that they're looking at.
Exactly, yes,
and
absolutely.
So that's going to be a space we will be focusing on, but completely out of time. With that, it's a wrap on this edition of Profit Buzzers. Lots more lined up on the other side. Please stay tuned to NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio.
Hello and welcome to Earnings Edge right here on NDTV Profit. My name is Puneet Zaveri and we're going to be speaking and taking stock of Kararo India after the company came out with its Q4 earnings. Q4 was largely in line for the company, a very decent performance, but what does the outlook look for FY26 as well as for the business? We're now joined by Mr. Balaji Gopalan, who is the Managing Director of Kararo India. Mr. Balaji, a very good morning to you and thanks so much for joining in to NDTV Profit. I think this is the first time we're speaking, so just wanted to get a little bit more color on the business first before I get into Q4. For the company, you're largely in terms of products, you are largely into transmission, axles as well as gears, and you largely work in the agricultural as well as in the tractor space as well as the construction equipment space. Just talk to us a little bit about your products first in terms of transmission, axle and gears. What is the product proposition in India as well as how is the current competitive intensity for the same?
Okay, thank you very much for taking us in for your telecast. I'm Balaji Gopalan from Kararo India Limited. We are an Italian multinational. We have our manufacturing locations all around the world. And in India, we are present for the last 27 years and we are consolidating and growing. Our product range starts from the agriculture transmission, which moves from roughly 50 horsepower to about 130, 150 horsepower. So we have the entire portfolio of axles and gearboxes, both for construction equipment, which includes backhoe loaders, wheel loaders, teleboom handlers, all those kind of machinery. And in the agriculture, largely we focus on tractors. So we have the entire range covering from 50 horsepower to 150 horsepower with technology including manual, semi-automatic, automatic transmissions for the market that we are catering to. All tractor manufacturers are in some way a customer for Kararo in India. We have a big basket, a total of 49 customers in our basket, and we cater to almost everybody in this industry. Kararo's strength is on technology. We are a technology solution provider of transmission systems. When I say transmission systems, the product of Kararo, our technology, is to take the power from the engine and transmit it to all the four wheels. This is where Kararo plays a role by introducing axles and transmissions to meet this purpose. We are not into low-end mechanical and low horsepower vehicles. We like to focus on horsepowers beyond 50 horsepower, going up to 150 horsepower, and at least a synchronized gearbox, preferably semi-automatic and also automatic. So we feed what the emerging technology of this industry needs with an experience legacy of 90 years globally in all soil conditions and all duty cycles. So our products are very well tested, validated and reliable and quick to market for all OEMs in India who are planning to launch new vehicles in agriculture and the construction equipment sector.
Got that, Mr. Balaji, and thanks so much for the detailed answer as well. So largely, of course, you mentioned that you have a global parent, and I'll just come back to that in a bit. Roughly 47% of your revenues for this year comes from the agriculture space, where you mentioned you largely, look at the tractor space from this and that vertical. The rest 41%, of course, in the construction equipment, and as you rightly said, backhoe loaders being one of the forklifts are the other products. For tractors, last year was actually a kind of like a decent year. In Q4 also we saw a decent growth, and over the next couple of years as well, a lot of positive commentary coming in from a lot of tractor players that are also listed on the stock exchange. Do you expect that this segment will have higher growth compared to construction equipment? And it's also, if you can give us some details on the margin profile for both products. Is it largely similar between the 10 to 11% range, or is agriculture slightly more margins? If you can give us some color on that.
Yeah. First of all, coming to the market, the agriculture market, the tractor market is showing resilience. It is coming back and it is growing. If we look at the total market, it is roughly 10 lakhs, about 1 million. But Kararo focuses, as I said, on high technology, high horsepower and four-wheel drive. We don't operate in two-wheel drive segment at all. So if you look at the four-wheel drive segment, that is an emerging segment that is coming into India, and our growth will not be determined by the industry growth, but by the segmental growth of the four-wheel drive in India. Just to give you a perspective, in developed countries like Europe and US, the four-wheel drive market constitutes close to 98-99% of their total tractors sold in their country. Compared to that, about 4 years back in India, the four-wheel drive market was only 1 to 2%. Okay, in 3 years, that is last financial year, we came close to 20%. Today, it is around 20-22%. There is a technology absorption that is happening. There is going to be a complete change in the platform of tractors, because the two-wheel drive tractors are the old technology, the legacy system that is being continued, but with the focus on food security, on focus on farm efficiency, focus on the contract manufacturing that is happening in all the farms. So small holdings are now getting converted into aggregated farming action places, and that is the reason the four-wheel drive market is catching up. When you need farm mechanization, you need a higher horsepower and a four-wheel drive tractor to support the implements that are getting attached to the tractor. So all in all, it is creating the right fertile ground for the four-wheel drive technology penetration in India. And as I said, in the last 5 years, from a 2% market share, it has already touched 20, and Kararo is expecting very, very realistically that it will go close to 40% in the next 2 to 3 years or maximum 4 years, while the global average comes to 99%. And this is the future for Kararo. This is what we are betting in, and the OEMs are supporting us well. We have a very significant market share, dominant position of more than 60% in this segment as well. So the going seems good. We are in the right path. We have penetrated the right segment in the market, and the OEMs are recognizing the contribution that Kararo can give for them to launch a technology product that is higher than what is existing currently with them, and quick time to market with products that are already tested in the Kararo portfolio. Secondly, coming to the margins that you were asking, it is by and large the same. It doesn't matter whether it is for agriculture or for the construction equipment. It is determined by the configuration and the technology patch-up that is happening in the products that we sell. So you could, like we have the cars where you have different levels of configuration and the cost varies. Same thing happens even for the gearbox and the axles, where you can add in technology and the cost and the margin improves. Better the technology, better the margins. That is the principle. It doesn't matter construction or agriculture.
Got that, Mr. Balaji. And just wanted to talk a little bit on the export market as well. That's roughly about roughly 33% of your revenues. It's fallen from the previous year of around 36% share, but I'm guessing that's largely because the domestic market has performed well in Q4 also. What is your current relationship with your parent in this regards for the export markets? What are the geographies that you target specifically? And also, what is the relationship with the parent? Because I'm guessing that if you are targeting Europe, for example, there will be another subsidiary possibly of Kararo there. So what is the working of that relationship, if you can give us some light there?
The Kararo industrial footprint is on the basis of center of excellence. For Carraro Group globally, Carraro India is the center of excellence for transmissions and transmission specifically for agriculture application. It is a high investment industry. There is a lot of technology that is built into the manufacturing process itself. And to that reason, we cannot be replicating the same thing in different locations of Carraro Group. So to answer your question, we have our sales and marketing team, which is integrated with the global sales and marketing. Business is acquired globally, and based on the center of excellence, it is passed on to the respective subsidiaries of the group. So anything pertaining to transmission required globally, Carraro India will be the first choice for the sourcing of those products from here. And secondly, the export market, we have always said that it is a bit subdued, it is going a bit slow. OEMs are waiting and watching. They are hoping a pickup because they feel it has bottomed out. So they are only waiting for a pickup probably during the last few months of this year. But again, we always say Carraro is a small player, but see the big in the small. Our segment is very, very defined, and that segment is not the largest segment in that market, but in that segment, we become the dominant player, and we have market share of more than 60%, like in the four-wheel drive axle market. So same logic applies to the export as well. We get new wins, we get new businesses. For example, we have recently got a very big business from a top global player, wherein in the next 3 years, we are ramping up for a revenue of around 300 crores just by this single customer to whom we have started export. We have already started exporting. We would be exporting around 8 to 10,000 axles this year. Next year, we are looking at going to about 13, 14, ultimately going to 19,000 plus axles, which would give me a revenue of more than 300 crores by export. Okay. Thirdly, it is the markets are for us a kind of a blue ocean where we don't target any specific region. Our global team goes and acquires market. Very often the customer picks up products in one location, assembles the vehicle, and then onward export it around the world. So we have really no direct control, or we can't even monitor where the final vehicle is reaching. We only know where that vehicle is getting assembled. So we have an open field as far as the export is concerned from a Carraro India perspective. Have I answered your question?
Yes, Mr. Balaji, most definitely. I also just wanted one question on the historicals as well, because the last 3 years, if we see the company's revenue profile between FY23 and 25 has largely between 17 to 1800 crores. But in this time, you've improved your EBITDA substantially by 50%, and profits have gone up almost 100% in the when I compare to the FY23 level. What has led to this growth in EBITDA as well as profit at a time where revenue hasn't grown, and how does that augur for FY26?
Yes, perfect. This is a very valid question, and this is the feather in the cap that we have today, that with a modest revenue of just 1% growth, we could pull out a better EBITDA of plus 35%, moving from 8.3% EBITDA to a solid 10.2 EBITDA. This basically highlights our focus on operational efficiencies and localization, and this has kind of indicated when we have declared these results now. Our royalties were reduced when we went for an IPO. We reworked the royalties because about 154 IPs were bought by Carraro India during this period. So we have stopped paying the product royalty to our headquarters. This was partially captured in the previous financial year because it happened from September, October of that financial year. Now, this coming year, we will capture it fully. So that will give us some advantages. Lot of cost savings. Our strategy is to keep the cost fixed and grow our revenue. So in my 2026 plan, I have a growth projected at 8 to 12% in my revenue, which will take me to the range of 215 to 220 or even slightly higher million euro. So we will cross the 2000 crore mark this year, keeping our fixed cost the same. A very strong indicator from a metrics is we are increasing our revenue by probably 10%, but my headcount, I have reduced 100 people. So we have agreement signed with the union. We have other fixed costs that are being monitored and controlled. And we have a big component of localization that comes in. In the past, my localization was in the range of around 65 to 67%. It was around 65, 67%. That moved up to around 77% this year, last financial year. And this financial year, we hope to have a 80% localization. Moving forward, we will touch 88 in the next 3 years. This localization, every component, we save duties, transportation cost. So the landed cost, I save between 10 to 15% on the purchasing price of these components. So localization, efficiencies in the plant, cost cutting measures, and the royalties, all put together is supporting my growth in my EBITDA.
Just one last question, Mr. Balaji, to you. You also have a other segment specifically, because 47% from agriculture, 41% from construction equipment, there's the less 11% others. That's roughly 200 crores of revenue for this year. What does that include, firstly? And second, also on capacity utilization, both plants running at 75%. Do you need to do any capex for increasing the plant capacity over the next 2 years?
Okay. Coming to the first question, the others is basically spare parts, gears, and loose components that we assemble in Kararo, India, and send it to our Kararo locations globally. So basically coming down to, we are looking at the gear business, we are looking at loose components that we assemble, and we are looking at spare parts, which constitutes the 200 crores. This is answering the first question. Can you repeat the second question, please?
Yes, sir. It was just on capacity utilization for both your plants in Pune. Yeah.
Okay, perfect. Capacity utilization for our kind of manufacturing setup, we normally do not exceed 80% because it is not healthy to load all our capacities 100%. There could be breakdowns in machinery. There could be a sudden spike in demand because many of our OEMs win some tenders and they quickly want to deliver within next 2 to 3 months a large number as per the tendering process. So we keep our capacities as 80%. That is optimum and that is very healthy. Currently, we are between 75, 78%, but with the growth that is coming in on the export that I told you, which is going to give us 300 crores in the next 3 years, we need to expand. We are squeezing our capacities. We will be moving to close to 80, 82%, 83% in the next 9 months, by which time we will kick in the expansion project. We have a plan to expand 25,000 square meters. That is 2.5 lakh square feet of factory area. We have the land bank to do that. And that will happen in 3 steps, starting more or less in the last quarter of this year. And then we will be doing the expansion in the next financial year and closing it in the 3rd financial year. So my investments will get divided into 3 tranches. And we will ensure that our capacities don't get underutilized. This is one of the key to bring in better profitability as well.
And this will be at Ranjangaon in Pune itself, the additional land bank that you have, this new plant will come there itself?
Yes, we have 53 acres of land in Ranjangaon, and we still have around 35 acres which are there available for the expansion.
Just wanted to have your view. How was Q4 for you? What were the misses according to you, and what led to this growth? What were the key highlighting factors that you would like to mention?
Sure. So obviously, as I've been speaking over various forums in the last 1 year, we were focused completely on private label, our own brand of medicines actually. And we have seen a significant growth of that. We have focused on it. So we did achieve what we really wanted to do out there. But because we put a lot of emphasis on that and the entire incentives and all were aligned towards actually increasing the private label, I think our rest of the sales may have suffered a little bit. So the growth was not to the level I wanted. and we would have been happier with a slightly higher growth over last quarter. That's about it. But, that was to be expected. We will be making some course correction as we go forward, in the next 2 quarters and all, and I'm pretty sure it will get adjusted. The other thing, while the overall profit and everything else for the year was decent, we would have, wanted slightly more, and that would have come on the back of slightly better same-store sales growth. And the reason why I believe it did not come was mainly because, we have grown quite significantly in the last 2-3 years, and that kind of, put a pressure, put a lot of, strain on the supply chain and everything else, which we are in the process of correcting actually. We have taken on some of those costs. The benefits have not yet come. So all the benefits because of private label growth have not completely gone down to the bottom. So that will happen. And 2, the same store sales growth, which should have actually been slightly higher, will, actually correct itself as we go forward on the back of some of the corrections, both in the supply chain side, easing of some of those constraints out there on our warehouses and all, and also, staffing some of these areas.
Got that point. Now, Mr. Reddy, private label, which is the highlighting factor when it comes to MedPlus, and which is actually the interesting point. What is the target that you have set, say, for next 3 years? Because you've done a lot of, I would say you've done a big transition in terms of product mix, but how are you thinking when it comes to next 3 years? Because I believe currently it contributes almost roughly 14% to the top line. So where you want to take this private label contribution?
Sure. So let me actually put that in the right perspective. Our private label, we sell on a MRP of 100 rupees. We sell it at around we sell it around 45 to 50 rupees versus a brand which we sell at 80. So when a brand is substituted, you will see a top line dip out there. So the right way to look at it is, match the MRP sales to MRP sales so that you actually get the volume sales out there. If you look at it that way, 20% or 21% by MRP was, contributed from the private label side in the last month of last quarter actually. So if you look at it, from 0 in June 23, we have now come to almost 20-21%. And this is, mind you, 20% of the 80 which we sell in medicine. So if you look at it, 25% of all the medicines which we sell today come from the MedPlus brand. So pretty steep, growth curve, I would say, on that side. But now that the early adopters have come in and all, I expect that the growth will be slightly slower. We expect that we'll grow only at around 1% every quarter kind of stuff. Q1 could be slightly weaker on that side because I think we've probably taken in some extra sales in Q4 of last year. So 1% every quarter is the number we are guiding towards on the growth of private label. That's one. But that is for the next 6 to 8 quarters. At some point, I believe, as, let us say, more and more customers understand that all the medicines which are made in India are more or less generic, and all you need to do is pick the right manufacturer and get the right price. I think people will start switching towards the generics more and more, and we could actually see, I would say some kind of a tipping point at some point of time. That will be aided by what the government is doing on educating people about generics. What I believe my competition will also, sooner or later come around and basically start selling this stuff. So when everyone starts talking about this along with us for a period of time, I expect that the entire country will, at least this medicines will get completely genericized. So I don't see any, I would say, cap on the amount of sales. But in the near term, I would expect that, we'll probably grow at the rate of around 1% every quarter.
Got that point. Also, on the store expansion, so last year you opened around 305 stores, and if I'm not wrong, this year you're targeting 600 stores for FY26. And I believe you have around, 400 crores of cash, so you won't be requiring any external funds, right? So, how will your margin shape up considering the store additions that you have for, FY26?
So the 600 stores will have a small lag, let's say, on the drag down on the margin, but not very significant because now it is going to be on a base of nearly 4,700 stores. So I don't really expect it to be a huge drag, I would think, but there will be some. As you rightly said, we have the money in the bank. We don't have any debt at all. So we could basically borrow if necessary. But I don't think it will be necessary given that we are adding only around 600 stores this year. That should not take us more than 170, 180 crores to actually open, and that includes the inventory and all. So cash-wise, we are, good. Growth-wise, we should, come back once our warehouses and all are in position and we start doing things the right way on the back end. And once we align our front-end staff also more towards a top-line growth rather than just only towards a private label growth. And and on setting up the store itself, I think, we're more than capable of doing that. Although we did only 300 stores last year, that is kind of a small, I would say a dip for us. And we were just, kind of going slow to make sure that the back end was all in place for future growth. So yeah, I think we're good on both capability as well as money side. And I don't think that the effect on margin will be too big. The drag will be too big, yeah.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Well, it's another day of kind of consolidation. India market closed. Welcome. I'm Harsh Saita. With me is Neeraj Shah. Let's look at how the Nifty 50 is shaped up. We've largely been range bound around a fifth of a percent lower. 24,770 is the number we're staring at this point. Nifty Bank, slight bit of outperformance seen there. But let's try and break down as to where the pockets of outperformance actually are. Let's look at the intraday on the Nifty 50, and when you're looking at the way the day has progressed, the top, that spike made right at the start, after which it's been a fairly range-bound sort of day pretty much through the day. We're definitely off the low point of the day as well, so around 50 odd points from that low point of the day. That's how it's shaping. Let's look at the heat map on the Nifty 50, and there you go. Not too bad, but life insurers is one pocket which is doing well. SBI as well as HDFC Life sitting in the green for sure. HDFC Life the top gainer. In terms of the top loser, no real surprise with ITC sitting at the bottom. But outside of that, you're also seeing consumer stocks under a bit of pressure. Nestle, Tata Consumer, Grasim, some of those names are seeing some bit of pressure in trade today. You're also seeing some bit of pressure within hospitals with Apollo Hospitals down, Sun Pharma also down. So the entire flavor around Pharma also looking slightly on the weaker footing. Let's look at it sectorally now, and maybe that gives us a better flavor. The India Defence Index, the Nifty India Defence Index, perennially at the top, at least over the last couple of weeks, 1% higher again today. But FMCG, no surprise that one is down. Auto, metals also, two of the laggards in trade today, 0.5% down each. The Nifty Bank flat, I did mention that. The Nifty IT also flat. So no real contribution coming in from both of those heavyweight indices, and that seems to be playing out on the Nifty 50. Let's look at the advanced decline before I toss it to Neeraj for broader markets. It's been a more stabler day of sorts than yesterday, if I can describe it. But the advances outstripped the declines by just a narrow margin, and that has been the case pretty much through the day. Neeraj, broader markets.
Yeah, well, you could argue that the volatility index has compressed a bit more, which is actually a good sign in trade. But if you can pull up the BSE 500 or the Nifty 500 gainers and losers list for the top movers, and just give you a sense of what's moving and what's not. So on the losing side, Gujarat Fluoro and has been under pressure through the morning and continues to succumb to some selling pressure. So that one stands out. There is some weakness in Oro Pharma as well. Shree Cement succumbs to some selling, about 3% lower for itself. There is weakness in Escorts, Kubota, and TTK Prestige after the numbers that came out. Continues to have a bit of an issue. NMDC corrects because of a slightly weaker quarter two. On the gaining side though, ITI rock solid today through the day because the numbers slightly above what was estimated, I think, and on the margin performance they've done well, as a result of which I think that stock stands out. LIC of course stands out, and today we're going to do a bit later on the show a bull versus bear argument on Life Insurance Corporation of India. So that is something I'm looking forward to. But the T&D players and the energy players, energy transition players like Hitachi Energy, Suzlon, Inox Mid, etc., I think are doing pretty well for themselves. So that's a bucket you want to certainly keep an eye out for. 5.5% for Hitachi. The others too have not done too badly. Suzlon about 1.5%. Wonder if Inox Wind is in the green as well. Should pull that one up to, I think, our Inox Wind Energy, because those stocks too have done reasonably okay. Shivangi Sarda, analyst of derivatives, wealth management at Motilal Oswal Financial Services, with us on the show. Shivangi, great having you as always. Thanks for taking the time out. We were looking at the call data for both May and June, and seems that across strikes from 24,800 to 25,000, there is massive OI build-up. Is it difficult for the index to breach those levels because of this call writing done?
Hello, very good afternoon. Thank you for having me. So we've seen that, rightly pointed out, call concentration has sharply, lowered in the last two trading sessions. Earlier, we were seeing that 26,000 was the maximum call open interest for the May series, but we've seen yesterday it shifted to 25,000 marks, and today we've seen some pressure as well at the higher zones. Overall consolidating because bulls are also acting up on the lower levels as the crucial support zones. But of course, there is a capped upside that we can see. Now, remarkably, for both the May and the June series, we've seen that the premiums are quite heavy. Now, even in the monthly expiry week that we're standing, and it's just one day prior to the expiry, we're actually seeing a lot of premiums near about the at the money strikes, which is quite a lot of remarkable right now, because we've seen that Nifty index hasn't been moving in a very volatile manner, but the swings in the option premiums can be seen. So overall, quite a different expiry that we will be witnessing, but buy on decline to continue positionally. Of course, intraday, there will be volatile swings on either sides because there is a clear tug of war between the bulls and bears. So we are looking at 24,650 as a major support level for Nifty for the upside of 24,950 marks.
Would you be slightly more constructive, the Bank Nifty, Shivangi?
Harsh, looking at the banking and financial space, of course, there is some sort of outperformance here. I would like to say that Bank Nifty has been, in strength as it's not fallen as compared to the Nifty index. But overall, we've seen quite a lot of lackluster move from the last 5 trading sessions here, and heavyweights have been, are a little bit on the back seat from the last 2 trading sessions, although volumes in long build-up can be seen in some of the good pillar names. But of course, there is a good support at 55,000, which is being clearly respected here. So this can be looked out for the monthly expiry for the next up move towards 56,000 levels.
So therefore, what are your picks for this afternoon, Shivangi?
So first up on my radar is CDSL. We've seen that overall, with the retail participation increasing and the kind of financial literacy that the industry is focusing on, the awareness, we've seen that the growth trajectory for these exchange platforms have been quite good. Of course, gradual recovery has also been seen in CDSL. Technically, if we talk about this stock, it has come out of its consolidation of the last 7 trading sessions, holding very well at the higher levels. We've seen a gap up and a sustainable follow up after the breakout. So overall, strength can be seen here. RSI is also showing positive divergence here. So recommending a buy on CDSL with a target of 1570 levels with a stop of 1480 zones. And the second pick on my radar is Cummins India. We've seen that this stock has been placed well above its key exponential moving averages recently. We've seen that on a month-on-month basis, this stock has consolidated from the last 4 months in a very narrow band. But interestingly, there has been a very strong support-based buying, which is indicating that there is a price surge which is due to happen in this stock. Overall, we've seen that resistances are also shifting higher, and call writers are slightly unwinding their positions as well. So this one is also looking quite positive, recommending a buy here with a target of 31.30 and a stop of 29.50 levels.
Shivangi, where are you short?
Looking at the markets, we've seen that there has been quite a lot of tricky pockets. Now, of course, there are some pharma names which are looking quite weak, but overall, the markets have been quite volatile. And I would suggest that, even if we are going short, it should be with a strict stop loss. We have seen some of the metal space stocks and the power stocks also in weakness. But of course, there has been quite a lot of consolidation among these stocks. So recommendation would be to be very light on the sell side because short covering move can also be seen very quickly in some of the other names in the same sector.
Okay, that's interesting. Okay, Shivangi, I don't know if you've ever looked at this business or no, but it's the management that we're speaking up next, and would love to know if you have a view here. Transrail lighting. If you've looked at that, and if you haven't, then other businesses in the T&D space. KEC International had a fairly sharp move yesterday. There are a couple of others. Any thoughts here?
So of course, looking at KEC, because that's one has been on my radar. We've seen that this week has seen an exceptional price volume surge, and RSI is also showing positive divergence. Of course, there was a lot of lackluster movement in the last 3 months, but overall, this stock has picked up. And after the outperformance of the last around about 5 odd years, we've seen a little bit of a halt here, but overall respecting its lower levels, which is a good sign. So investors are quite comfortable, because there is not much of a pain point here. But trading point of view, this stock might lack momentum as of now.
Okay, Shivangi, thank you for joining us. We'll let you go on that note, and we'll quickly switch to that corporate conversation that Neeraj was referring to. We have Mr. Randeep Narang with us, who's the Managing Director and CEO at Transrail Lighting, joining us here physically. Thank you so much, sir, first off, for taking out the time and coming and meeting us. So I want to start off first with the FY25 numbers. It's a very strong set of numbers for the full year. You've grown at 30%. You've got a strong order book. What's the outlook like for FY26? One, from an execution perspective, and second, from an order book perspective. What's the potential currently looking like?
Okay. Thank you for having me over. It's a pleasure to be here.
It's a pleasure. It's completely ours.
So we had got listed in December, and we had given guidance that we will look at around a 25-30% growth, and our EBITDA would be in the range of 12.2%. So we are actually on track for that for 24-25, and it has been a good year. Also, we had around 9,500 odd crores of new orders. So as of end of March, our unexecuted order book is approximately 14,500 crores. Now, with this trajectory, the growth in infrastructure, both in India and international, specifically for T&D, because 92% of our focus is T&D. That's the way we look at it. We're a T&D company, and we're also looking at growing in different sectors, but we're looking at a slow growth, looking at where we build our PQs, and we develop on this other side of T&D. So our guidance for this year would be, again, maintaining the level of order intake. See, we are very careful on the selection of our orders, be it geography, margin profile, the risk of managing the execution on time, the right kind of utilities. So we therefore have a very clear risk matrix which defines where to go, where not to go. And almost 4 to 5 jobs out of 10 we do not go ahead with. Okay. So the drive is the margin-led growth, margin-led order intake.
So you would give up orders largely because they are lower margin? Is that what you're saying?
See, it
is
depends
that the
on
only metric?
No, it's not. It's competitive intensity. It's looking at the geography, completion on time, the projects, understanding the payment terms and payment cycle, commercial terms. So it's a whole lot of 7-10 factors which decide which jobs to bid and which not to bid. And of course, in the end of the day, we know if the terrain is hugely having ROW or issues and projects are going to delay it impacts your margin. So we are careful about that.
So should we expect a 30% growth at least visible over the next maybe 2 to 3 years? Is that something that
we would look at
reasonable?
around 25% going forward in the year 26.
Sure.
And then as the order continues to flow in, that will be in the same trajectory of 20-25%.
Got it. Now, when I look at, I mean, it's an interesting point that you made, Mr. Narang, that you're picky and choosy about T&D, even though, did you say 92% of your business is
revenue
T&D?
is,
Yeah, when I look at comparable companies, the margin difference is stark and visible. You reckon that order inflow can continue to be as strong as it has been while you maintain your margin profile? The reason I ask this because almost everybody seems to say that evacuation is the big problem right now, and therefore your business seems to be well placed.
Well, we have our execution both happening internationally and domestically. It's a 50-50 mix on T&D.
Okay.
And obviously the part focus is that you execute on time within the timeline of the contract. What we believe is that that's a basic mantra before time completion, and we endeavor to do that. Of course, there are challenges on the way. It could be ROW, could be forest, could be, sometime seasonal issues for, functional Diwali, Holi, where the skilled labor goes away. So these are all the challenges, part of our, DNA of a EPC company.
Okay. What's the outlook like? I mean, you briefly gave the color when Harsh asked you the question, but I'm kind of inclined to ask this a bit further. So would you believe that the way the DEX is set right now, that this growth number that you spoke about could well continue for the better part of the remainder of the decade? Or is it a fairly near-term visibility that a company like yours would have right now?
So we don't believe in short-term focus. We have a 3-year strategic plan, and we are very clear that with the growth of infra, we're talking about T&D growing in India and internationally more than 100,000 crores of the potential market opportunity, new geographies. So we believe that the T&D space in infra will go for the next 3-5 years without a problem. And we are very happy and bullish to enjoy this journey and do what we are supposed to do, is deliver good results for our company and stakeholders.
So, sorry, just a follow up there. And I believe that the past, so revenue CAGR, let's say 15, 20, 22%, whatever, for the next 3 to 5 years. I've seen that your last 3-4 years, if I look at the EBITDA CAGR, it's been much higher. But it might be deceptive because you may not be able to do it the same pace because your margins have stayed steady per se, right? If I'm not wrong, 12%.
Yes.
So would it be safe to assume that as you pencil in your growth for the next 3 to 5 years, you would probably do circa 20% ballpark revenue growth, EBITDA growth, and bottom line growth in almost equivalent fashion?
Revenue growth for sure. Margin profile, as we said, we are picky and choosy, so we definitely want to look at 11.5, 12.5%,
that range, broadly.
Yes, yes. Because see, as you look at the geography and the orders and the intensity, we need to be very clear about, the balancing of the order intake and balancing of the revenue profile. So we would do that.
And I'm guessing, sorry, one follow-up to that. I'm guessing you would keep leverage under check. And therefore, it will not be that the interest cost goes so high that the PAT growth is not commensurate with the EBITDA growth.
Absolutely right. And the other part which is very important for our company to be informed is that we are well diversified, backward integrated. So we have our own conductor manufacturing, tower manufacturing, our own testing, which is unique to the industry because we also have conductors which we manufacture, which is the L59, HDLS. So therefore, that helps us in being more competitive.
Got it. So the current, so net point being the current debt of around 600 odd crore should remain as is?
It will go up marginally because we are expanding our factories and looking at some capex loans and etc. But that is well, within the realms of what we think is right in terms of the payback.
Fair point. And so therefore, capacity expansion, you're building in for very, very strong expansion. You're virtually more than doubling, at least on the ongoing expansion that you've announced. How quickly does that come on stream? And how quickly do capacities get maxed out?
So we are having 2 phases of expansion. The first phase of tower expansion, which we got a budget approval from our board in January, was around 326 crores, which already work is happening. We are doing a brownfield and a greenfield project. A brownfield project itself will come into stream by June, July this year for towers. The new factory conductor, which is already towers is started, will happen by end of the year. And the conductor expansion in our existing brownfield factory will happen in the first quarter of next year. So we are already in stream, and this is very clearly defined based on the order intake we have and the order book we have to execute. Now that was phase 1. Phase 1, which is phase 2 now, is what we are looking at is, as you rightly said, new orders. How do we look at planning for 2 years? So that's a 2-year horizon, 18 months horizon, where we are now looking at within the existing tower and conductor factory a brownfield expansion. We're looking at 50 odd crores both for tower and conductor. And when you're executing on time, you need tools and plants. So that is very important in terms of TSC machines, rollers, winches, and so all this is part of the DNA, which we need to make sure that our margin is intact, and you pre-plan that for a 2-year horizon.
Mr. Narang, some idea about the landscape as it stands right now, because we've been talking about energy transition being such a big thing. Suddenly people have come up and say that evacuation is a problem currently while plants are getting built. As we understand power demand, during busy hours, maybe because of solar plants coming on stream, has gone so low that spot power rates have actually gone to near negligible, right? So give us some lay of the land of where you are operating in right now, and how do you see that changing, if at all, over the next 5 years?
So for us as a company and being focused on T&D, which is around 90% whether it is solar generation or it is nuclear or coal based, transmission remains the same in terms of evacuation of power and reaching from A point to B point, both domestic and internationally. So what we see is in India itself, a huge growth of the evacuation need. Several of the big companies are enjoying the order intake happening. We're talking about a 1 lakh crore opportunity. Internationally, both Africa, where we are pretty predominant, more than 15 countries we're working on. We're talking about Southeast Asia, SAARC. Everywhere there's a huge power demand and there is a need for evacuation, and therefore transmission lines come in. So we see the next 5-7 years horizon, since we are well spread out between international and domestic, gives us the buoyancy to feel that yes, we can deliver for our stakeholders and we are on the right journey.
Which is fine. The other question then therefore I have is that the common intelligence, if I can call it that, that we gather from people is that while, let's say for example, solar modules, solar panels, etc., has been a big opportunity because evacuation is a problem and storage therefore is becoming a problem, does battery energy storage system, for example, become a really big deal for India and for the world? It may not be relevant to you right now. Maybe you might have plans, maybe you don't. But which is why I said, okay, beyond your business as well, is there something that you see on the anvil?
Yes. So absolutely, the storage of electricity, managing the solar opportunity. In fact,
you can remove it if you want.
Okay. So sorry. So principally, we've seen that we are also interested in solar EPC. We're looking at international, we got one job, so we want to build the solar EPC portfolio for ourselves, and battery storage for sure is an opportunity, and we will look at as and where we feel that we have the wherewithal, the people, the execution, the skills, we will get into that.
Got it. So what's a couple of questions now. What's a comfortable order book to sales kind of ratio? Is that something you keep in mind, and what would that number be? Would it be 3 times?
At least 2.5 times.
Got it. And therefore, just trying to understand, the overall climate seems to suggest that there's a very strong demand for evac. How do you prioritize India versus Africa versus and therefore, is there some upside potential to margins given the kind of push that there is, demand that there is?
So there are 2 parts of it. One is, let me talk international, then come to domestic.
Sure.
International, we work with mostly multilateral funding agencies. It's a World Bank, Asian Development, African Development. And these are very organized, systematic funding of the utilities where they plan the ROW, they look at the funding and all that. And they have better commercial terms. So it helps us to work internationally because we are fully qualified in transmission globally, including our factories are enabled for all certifications. Now when we come to domestic, now domestic itself has improved. There are a lot of new jobs, opportunities coming in, contracts coming in, and the margin profile in India is also improving because you're talking about bigger kV jobs of 750 kV. So it's moving from 400 kV to 750 kV. So principally, it again depends on your ability to execute on time. See, if you get delayed for any reason, 3 months, 6 months, 9 months, it lowers your margin profile. So the key driver is diversification, backward integrated, good execution skills, and looking at good commercial skills. The billing to cash cycle should be good. So all these are integrated way to manage your margins.
So my final question is with regard to, and probably it's just a financials related question. When I'm looking at your numbers, working capital requirements are going up significantly in the near term. Is that something which is part of your business in terms of both inventory as well as receivables, or do you intend to bring that down?
We intend to bring that down. We definitely believe that we are looking at 74 days of net working capital. How can we improve that? And the reason of working capital requirement, that's why we went for an IPO to fund that. And therefore, we are pretty good in terms of stable for the next 2-3 years. And we feel that, of course, the improvement is every day and in every contract, in every place we work. So it's a constant endeavor to improve what we are doing, and it's the way of life.
Very interesting. Okay. Well, lovely talking to you, Mr. Naran. Thank you so much for being with us and giving us your thoughts, and all the best for the quarters ahead.
Pleasure is all mine. Thank you so much.
Thank you.
Privileged to be here.
No, the pleasure was entirely ours.
Thank you.
Thank you, sir. And viewers, we need to slip into a break on the note that Transrail is doing not too badly, 2.5% up again today. I think they have had some recent order wins as well, so all of that combines. You heard the management. Hopefully that answered most of your questions. We take a break, come back with all the chatter behind the dealing rooms. Stay tuned.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Do you really know the company you invest in? What is the real picture behind presentations and claims? Is the outlook as rosy as the company claims? Know Your Company, powered by NDTV Profit Research, shines a light on the biggest stock market movers.
Headlines you start your day with. What matters worldwide is now in the palm of your hands. Get ready to seize the day and maximize your financial potential. Stay ahead of the curve with all you need to know on NDTV Profit.
The markets move fast.
And so should your portfolio.
Back with India Market Close right here on NDTV Profit. Let's try and pull up the markets once. We are 0.2% lower. Not bad. The IT index is just bobbing between the red and the green. But for all the heavy lifting that the Nasdaq did yesterday, not quite showing in our IT index today, must say. Bit of pressure yesterday, and I think that continues in the session today as well. We just did a conversation with the management of Transrail, and for all of you who might want to do it, please go to the digital feed and look up the interview. The stock is up 2.5% as we speak as well. But if you want to know more about stocks and the insight or the inside stories, well, we try and get you the chatter from the dealing rooms in our special segment, Heard on the Street. Let's get in Somit to talk about all of this. Somit, good afternoon. Take your time. What do you have for us today?
Well, firstly, it's ITC. We did tell about the block deal that could happen, and now what I'm picking up from dealers is that big buyers were lined up for this. Some of the prominent names for ITC block deal were GQG, SBI Mutual Fund and ICICI Mutual Fund. They were among the bigger names that have bought some stake in ITC of the 2.6% block deal that happened with of BAT selling its stake in ITC. Second on the list is Eternal and NBCC. Now, dealers are indicating that there are buy flows on DI desk on both these counters. In fact, if you look at Eternal, which was earlier known as Zomato, it was down around 1% in trade. It has recovered from its day's low, and dealers are indicating that SBI ETF could be one of the passive buyers for Eternal in trade today. Then it's Sandur Manganese, which is on the list of dealers. They are indicating that high net worth individual HNIs and smart investors have started to accumulate this counter in trade on anticipation of strong Q4 numbers. In fact, of late, if you even look at the delivery volumes for Sandur Manganese, they are on the higher side. So keep an eye out for Sandur Manganese as well. For Bajaj consumers, dealers are indicating that there is a buzz on the street that the name of the new CEO might be announced very soon for this counter, so keep an eye out for Bajaj consumer as well. Tata Tech dealers are indicating that there could be a potential block deal anytime that could be announced soon. Tata Tech is a company which has been promoted by Tata Motors. And lastly, it's Belrise, a newly listed company. We saw muted listing, the stock gained around 9 to 10 odd % in trade, but dealers are indicating that large HNIs have been accumulating this counter at every dip. So there could be a potential rise going forward is what dealers are indicating. So keep an eye out for Belrise as well. It's just it listed just today in trade.
Okay. Well, certainly watch out for some of these. Sumit, I have one quick follow-up. So are any, I don't know whether you know this or not, but I'm just asking. In ITC, maybe I can look it up, but the names that you've spoken, are some of these repeat buyers? Because we know, for example, GQG has a pattern of investing further into companies that they've bought in. Any insight on this?
Well, it's all three the names that I mentioned, GQG, SBI and ICICI. All of them are repeat buyers. So it's not that they were waiting for this block, it seems as if.
And Sumit, now I'll be waiting for you to tell us at some point of time when BAT will be making any kind of exit in ITC hotels as well. Because I would guess that block too at some point of time would be on the anvil.
Yes, that block will happen, but Street is not expecting that block to happen at least for the next couple of quarters. So nothing on that so far.
Well, why is that so? The thought was that they would at some point.
Yes, they did mention that they will be looking to completely exit. In fact, that is a stated line that has come in.
Correct.
But they're just waiting for the right valuations to come in, and at that point they might.
ठीक है, ITC बेचा तो अभी थोड़ा राह देखते हैं. Hotels में बाद में बेचेंगे.
Anyways, ITC hotel they won't fetch much of money.
Yeah,
Here they are getting around 10-12,000 by selling just 2-3% stake.
Correct.
You know, the other thing is, by the way, just before we thank Sumit, BAT globally has had some stress points. Right. 2023 was a really bad year for them. 2024 they came back, but because of amortization and a few other things that they did. So it's not been a happy hunting ground globally. So therefore, if you're making money in a counter where the tape doesn't get disturbed, and India we've seen that now, the tape doesn't get disturbed due to large selling as well. Maybe it continues.
Yeah, but I'm just looking at maybe the PE ratio for an ITC. It's around 25 odd trailing 12 months. So, I mean, you always look at it 1 year forward. I know the rules, but yeah, and it's still
not
at
an
a premium
expensive.
to
1 year forward valuations would be around 20
to 23 times. Correct, which is largely in line with their 5-year average, and therefore just kind of wanting to put it out there. That's how valuations stack up. Yeah, thank you so much, Swami. Thank you. Anyway, so yes, Neeraj, a couple of these stocks, right, in focus. One is a Transrail. Very interesting conversation. 25% growth next 2-3 years, 25%. Listed at around 28 times odd price to earnings, currently sitting at around 25-26 times price to earnings. So that one's also looking decent, and I'd love to have this conversation. Let's in fact bring in our guests as well. We have Kush Bora, founder kushbora.com, and Dharmesh Kant, head equity research at Chola Securities, joining us. Good afternoon, gentlemen. Dharmesh, let me come straight to you. This Transrail lighting conversation that we've had has been an interesting one. With regard to the way in which the stock performance has been, from the IPO, we've seen the stock up maybe 50 odd % from the IPO price. So very good returns for investors and very strong commentary. Would you at all venture into some of the names within this space, and are there any preferences you have within this T&D space?
Yeah, good afternoon, Manoj. See, T&D space is definitely attractive, but the problem happens with the valuation. So if you look at historical valuation multiple of this space, so more or less, I mean, 25-26 times is where the average lies around, and beyond that, extending beyond that becomes difficult, because eventually over a period of time, say 5 years, 6 year or 10 year period of horizon, 20-25% kind of a CAGR growth is difficult to come by. So in couple of years it may happen, but eventually it lands up there. But this translate lighting has a very diversified business, and they're also heavily into the railway side of the business. So it augurs well for them, because to my mind, this year should be a good for all the railway, infra kind of companies. So there we think last year they lagged it because of lack of spending happening out there. But this year the catch up is there. Plus this year own allocation will come into the place. So that makes the entire space attractive. People who have invested in the IPO, or I mean who have taken new positions because of the, there was a decline in between, they may continue to hold on to the position. Fresh addition, if you are not looking at very strong gains, I mean, if you are looking at 50-20% kind of an upside from a year's perspective, is fine with that. The other stock from the, I mean, not from the T&D space, but from the railway infra space, which we are liking, or just on the basis of valuation multiples, is Ilcon International. I think the stock is, just poised for a re-rating, and maybe around, once it is re-rated, 300, 350 should be the likely target. And the reason why I say so, 15-16% kind of a growth it has delivered already. But our expectation is this year, FY26, they will be delivering around about 23 to 24% growth, both on revenue with stable margins and the profitability.
Always wondered, Dharmesh, why is there such a large difference between an IRCON and an RVNL in terms of the way in which they are valued? Is there a thought process there? I bring this question to you only because you mentioned IRCON, so just trying to get that.
No, even I am at loss of thoughts to figure out the difference, to be very honest with you. Yeah.
Sure, okay, point taken. Kush, let me come to you with regard to the index calls first. What's the view with regard to the Nifty? What's the outlook looking like, both the Nifty as well as the Bank Nifty?
Sure, first, very good afternoon, everyone.
Good afternoon.
Well, I think we're consolidating and maybe with a mild negative bias, but I'm not too perturbed by the moves that we've seen yesterday, and certainly not by the moves that we are seeing today. I still maintain that 24,500, 24,600, that support zone should act up today, tomorrow, for the next couple of days. Once the expiry is over, this one happens to be the monthly expiry, then we'll know the clear picture as to where does the index go. I would suggest that this is an opportunity to create long positions. Keep your stop losses at 24,500 or maybe just under that. Right now, what is happening is that 24,800 straddle is at play, which has a premium of roughly about 200 rupees. So over the course of whatever, a little under an hour left today, tomorrow, maybe the index could move within that range, and that falls precisely with that support and the resistance band of 24,600 and 25,000. So I think that's going to be the range for today, perhaps even tomorrow. But with 24,500 or just below as a stop loss, I think this could be an opportunity to create long positions, at least from a positional standpoint, if not an intraday trade. Bank Nifty has now started to consolidate with a mild positive bias, and it's holding above the 20-day moving average. So that's a positive sign, but the momentum is missing. Here too, the expiry effect might be lingering on. So for now, I think the 56,000 resistance on the upside acts up, but the support zone of 54,800 makes it a risk reward ratio of 1:1. So not very exciting up move on this one just yet. Maybe once it gives you that breakout, that's when you create a long position on the Bank Nifty. For now, you could focus on the Nifty.
Okay, what about your ideas? Good.
Both of them on the long side. First is Inox Wind. The stock has done well, we all know. But for the last two sessions, it's actually holding above the 200-day moving average. Call option data also suggesting resistances around the 200 mark. So that's some distance away. So on the upside for targets of 196, 199 and a stop loss around the 189 mark, Inox Wind is a long trade. On the other stock is Eris Life Sciences. Now, this is one stock that we had discussed yesterday also in our closing show for a second target for a first target of 620. Now, that's been hit. So we're moving up the targets to 1680 and 1740, and the stop loss also moves up, and that now stands at 1560. So Eris Life Sciences and Inox Wind are the two long calls for the day.
Okay, also time for stock of the day. Apollo Micro is the one which is buzzing on the back of 113 crore rupee order win, but that isn't so. Getting us a better perspective, here is Anushi.
Right, so Apollo Microsystems has been in focus for the last few sessions as we speak. First trigger being the new order win that we are looking at, which roughly sums up to the size of 114 crore. Now this is an export order that we are looking at, and this is for the development of avionics system is what we are seeing for the company. This is intended to be used for civil as well as military aircraft applications as we speak. So the first trigger is that. But even if we look in terms of how the performance have been, just a few days ago, the company came out with its fourth quarter results, wherein we did see a decent set of numbers. Revenue was up around 19% here. Margins stood at the levels of 22%, while net profit saw about a 8% of growth. And if you take the FY25 in picture, they also met their 45 to 50% of revenue growth that they had projected earlier in FY24. So that is the, but it's the outlook going forward, FY26, which is interesting for the company. Because if we look, the current order book stands roughly at the size of 600 crore. This is as per the management discussion which we just had. So this 600 crore, the management does see that by December 25 of this year, that would scale upwards to 2,500 crore. So it's almost a 4 to 5 times of a jump that we are looking at in terms of where the order book is concerned. So this provides further revenue visibility forward for the business. Now this would be led by missiles and naval defense sectors. So it's important to keep a track of on how the inflows are going to pan out for the company in this coming 9 months or 6 months that we look at. Now, other than that, if we talk about the guidance forward, the company has maintained its 2 years outlook in terms of a 45 to 50% of growth in terms of whether revenues are concerned. Operating margins, however, will be in the range of 22% that we are looking at in the sustainable range that we are seeing. But it's the first half where we'll be looking at more of an improvement in terms of where the margins are concerned. But second half may see a little bit of an impact in terms of margins, and this is on the account of execution. So that is another factor that we'll be keeping a track of. But overall, in terms of where the capacity addition is also concerned, Unit 2 and Unit 3, the management does expect it to start commencing operations from the second or the third quarter of FY26 onwards. That would lead to revenue growth as well. In fact, even the new acquisition that the company has made in explosive space. So if we take that in account, that excludes the 45 to 50% of growth that we are looking at, but with which the company expects to double its revenue going forward. So that is an interesting space also for the company. So overall, that's the outlook that we are looking for Apollo Microsystems.
Thank you so much for that, Anushi. Neeraj, some of these defense names have really picked up steam over the last couple of weeks. We saw maybe exactly 2 weeks back, in fact, the defense index up 14%. Last week as well, it closed in the green despite that kind of rally. And some of these counters now have seen a stupendous rise. Now, where to from here will really be the question. Because of the way in which some of these names have moved.
Yeah, the immediacy seems difficult to predict, Harsh, and maybe Kush and Dharmesh might be better placed, and Kush in particular, because of the technical charts. But the medium term, as we've discussed so many times right now, because of what's happened in Operation Sindoor and the proof of concept, that it seems, in fact, I just saw Apollo, as Anushi highlighted, an export order for avionics, right?
Yes.
And this is, again, a proof of concept, right? Maybe, I'm just putting 2 and 2 together, that maybe it's happened after, or maybe it got hurried after all of this has happened. Maybe Apollo didn't play any part in Operation Sindoor, I don't know. But maybe it just happened because of that. So, remains to be seen.
Yeah, absolutely. Want to go across, Dharmesh, probably take a view from you. How do you look at defense and aerospace? What has changed, in your opinion, so dramatically and rally warranted? Has things really changed on ground to warrant this rally?
Perception has changed. I mean, how you perceive the same companies has changed dramatically post this entire episode which has happened. And I mean, this is a humongous and a very tall task to achieve. I mean, from 600 crores of order books to 2,500 crores by the year end. I mean, only 6-7 months is left, or 9 months for the financial year is left. So such kind of order, if it does actually happen, then definitely this price of 100 PE multiple is quite justified, because it drops down to, I mean, 30-40 times PE multiple if you take that 10% kind of a PAT margin into that order book. So, but again, Harsh, the point is most of these companies are EMS players. Basically, they are into PCBA kind of an assembly, kitting and tolling kind of a thing. And those value additions are, I mean, very less compared to the entire product. I mean, if 2,500 crores of PCBA assembly is there, then the final product would be at least 5 lakh crore of product out there. So that is the size. I mean, 1.5 to 2% is PCBA goes into the entire, if a missile, if you are building a missile for that technology and everything. So The proof of the pudding has still to come on the numbers front. But as of now, most of them are heated. But still, having said that, there are fine plays out there. For example, Hindustan Aeronautics or BEL. I think solid companies are there, and still a lot of re-rating is likely to be there because they are into complete OEM manufacturing. So my only advice is, if you're looking at defense companies, look at OEM manufacturers rather than EMS kind of a player, because there can be too many slip between the cup and the tea eventually when the final numbers roll through for next 2-3 years.
Dharmesh, interesting perspective. Now, give us how one should look at these companies. Some suggest that you look at the order book size, look at margins, and determine how valuations should stack up. Some say look at growth potential, maybe next 1 to 2 years, what's the kind of growth clip, and therefore captures execution. And then there's a third basket which say that the cash flow, just the top line and PAT number doesn't count. It's the cash flow essentially that counts. How should one look at it? Should we look at this aggressively, look at only the order books, look at it slightly more conservatively, given everything that's playing out?
Yes, I can tell you about myself, how I look at these companies.
Sure.
So the first thing is the product profile, whether it is a service provider or an assembler like an EMS or PCBA kind of a thing, or whether it is an OEM. So when we picked up HL 2 years back, so the reason was a shift from an overall kind of a company to a complete OEM manufacturer. So that was point number one. And second is definitely the order book. So order book comes at the second stage. As of now, as we speak, it's 6x order book HL is sitting on. So the book-to-bill ratio is almost 1,85,000 odd crores of order book they're sitting on. And third definitely is the execution timeline. So you may be sitting on a very big order book, but the execution itself takes 3 to 5 years. Then that entire order book is split, the profitability is split over 3 to 5 years, then it doesn't make any sense. But if the execution timeline is lesser, 1 year, 1.5 years, then definitely your profitability growth would be far higher. So growth and margins will follow if these three things are in place. If it is a OEM manufacturer, a good size of order book, and the timeline, execution timeline is very critical in this.
Okay, while we are at it, we have flashes at the bottom of your screen. Some civil mock drills to be conducted, Gujarat, Punjab, J&K, Rajasthan, states bordering Pakistan. That's expected to happen tomorrow. So those residing in these states could well be part of those drills. So something again to quickly mark out. But Kush, quickly your take with regard to defense. You believe there is still some bit of leg to go with regard to this stupendous rally that we've had?
Not from a fresh allocation perspective, Harsh.
Okay.
Either you're seeing a lot of these names in overheated territories, or you're seeing negative RSI divergences which don't really bode well for a fresh long position. But the kind of momentum that you've seen and the shallow profit booking that some of the names like HAL, BDL have seen, and then they've rebounded quite sharply. I've maintained this for a while that these are stocks that you want to just keep in your portfolio, even if you sell say 50% to book profits. That's how much you sell, and then you re-enter at lower levels. But they haven't really been kind enough to give you those tips. So don't let go of any holdings that you have, but fresh positions I would suggest just wait up for some more time, because the risk ratio or risk reward ratio is not favorable. They keep moving higher, but then that just makes the risk ratio that much more unattractive. So no fresh allocation. But yes, if you do have, you don't want to let go of them.
Now, of course, that bucket of stocks buzzing, in fact, the top sectoral gainer is the Nifty India Defense. And we've hopefully given a good, complete view of how defense is currently playing out. But let's quickly take a look at some more buzzing stocks that are on our radar. Puneet joins us with some stocks buzzing on the back of numbers. Puneet.
Well, unfortunately, there's some defense component in here as well for Sansera Engineering. The growth has been continuing for the company in Q4 as well. And revenue is up 4%. EBITDA is largely flat, but they maintain the 16 to 17% price EBITDA margins, while profit is up 28%, at 59 crores. Now, the company's order book has consistently increased. It's up 16% on a YOY basis to come at 1,855 crores. And they also said in the conference call that they will be looking at the non-auto segment going forward, which is almost 30 to 40% of the revenues now. So it's become substantial. The margin push will come from those as well in the next context in the medium term, and hence the stock reacting to the commentary as well. The other key stock is Precision Camshafts, and this again is backed by results. And what's interesting is while the revenue of the company is down 25% in this particular quarter, it's actually the EBITDA that's led based on cost savings. That's the EBITDA is actually up 18%. So there's that 40% differential in lower revenue growth but actual margin growth. It was led by employee expenses that was down 11% YOY, as well as other expenses which was down 13% on a YOY basis. And Mr. Vijay Kedia does have a stake of over 1%, which has been one of the mainstays over the last 2 years at least. So watch out for this one. And finally, Techno Electric, another very solid quarter for the company. Revenue up 85%, EBITDA is up over 100% for the company, coming in at 126 crores versus 54 crores, and margins subsequently have gone up to 15.5% now in this particular quarter. Because of that, net profit is up 73% for this company as well. So overall, these three stocks buzzing on the back of earnings and reacting positively on commentary as well.
Okay, yep, and very strong move from some of them, but particularly, thanks Puneet for that, but particularly from Techno Electric, simply because it just surged during the course of the day, 8% higher, and then it's ending up about 13% higher. So it's very strong linear move. Kush, I reckon in technical parlance, such moves are welcome, but I don't have an idea of what the stock has done in the previous few days and weeks. So would love to understand from you, how do you think of it from a trade perspective?
Yeah, well, the reason for the big smile is that, about 12, 13 sessions ago, we did give that as a call for a second target.
Okay.
Oh, absolutely. 1250, 1290 were the targets. I mean, right now it's way above those, very comfortably above those. So my suggestion would be whoever's holding on now would be a good time to book this out completely, because despite the stock, giving these kind of good moves, still some distance from overheated territories. And, first time it's crossed the 200-day moving average for this calendar year. Now it comes up to those selling zones of about 1400 to 1440 odd. So there could be some supply pressure that might come in for anyone who's been holding on to this for more than last 6-7 months. You might just see some selling come about. But if you've got a position, you might want to book it out. If not, then just wait for some dip closer to the 1300 mark. That's again a good entry point. On the whole, the medium term structure for Techno Electric is very much intact.
Any thoughts from you, Dharmesh, on any of these, including Techno Electric?
None whatsoever, Neeraj.
No.
So I will take just a minute here.
Yeah.
Neeraj, I was just going through all the numbers of all the 600 companies which have reported number, and the pain point was you were unable to find a flavor. There was no secular move anywhere. And there was nothing negative, but at the same time, there was nothing positive in most of the numbers which came through. It's just that relative trades are playing out, and because of lack of liquidity, you do see such volume surge on the day the results are announced. But again, the drift is not there. So the hard point is the drift is not there. And secondly, the other highlight was almost 30% of the companies of that 540 companies which we were glancing through reported negative earnings growth not for the quarter, but for the entire financial year, FY25 as well. And the absolute growth was 6.5% for FY25. So that is what is a bit of a worrisome at this point of view when you are going to pick up a stock. So, and management is also very unclear as to the directional. I mean, defense and all is fine. They are very, gung-ho about their sector. But apart from that, if you look at anyways, even banking companies, if you talk to them, they are not sounding very confident about, say, 15% or near 20% kind of a profit growth in FY26 or 27. So that's the worry reason. That's why we are seeing consistent profit taking at higher levels.
So maybe that's something, and that's true, right, Neeraj? We haven't seen. That's so true, Dharmesh. Actually, that we haven't seen very bullish commentary from any one pocket of the market. There have been certain specific stocks where there has been extremely bullish commentary coming through in Q4.
But very unlikely that we will have synchronous commentary which is very constructive from a sector in the last 3-4 quarters either, right, Harsh?
Yes.
So, which is fine, but individual pockets. So, I mean, I don't know if NBFCs per se gave that, but otherwise I thought the commentary from most defense names. So, everybody from Apollo to an Ashok Atluri of Zen to whoever else that we spoke to, I thought was very constructive commentary. I don't remember the railway companies. Real estate still seemed optimistic. But otherwise, yes, you could argue, but do we hear that as a synchronous commentary?
Generally, when we see a bit of an uptick with regard to where IT is concerned, we start to see that commentary change a little bit. We didn't see that flavor coming in. Maybe so that's one pocket. But anywho, I mean that's broadly how we see it. Dharmesh, I wonder whether ITC would be something that you're looking for, because that's not a conversation that we've had. I mean, Neeraj, me, Somit had that. But what's your quick take with regard to an ITC?
Not really. I mean, the entire, FMCG space, I don't think it's just a trading bet. I mean, couple of percentage point here and there. And if you look at long-term averages, I heard Neeraj mentioning that a while back. It's actually trading there. Even after this block deal, I mean, there was a correction. Then there's a dividend issue. I mean, 1.5% goes into dividend as well in the price correction. But again, if you say 6 months down the line, whether it would be a trending buy for say 15% or 20%, it doesn't look like in ITC as well. So it's a very muted set of environment which we are experiencing, whomsoever we are talking at different regions of the country, be it north, east, even in the south. So I mean, things are very muted, and that's the reason why I think this year will be very difficult in stock picking.
Yeah, certainly seems to be that way. Okay, well, let's move on from the listed to the unlisted. Or is it unlisted? Because it behaves like a listed company for sure. The kind of trading that happens on the NSE stock. But with the NSE IPO on the brink of SEBI approval, or so we feel, the shares obviously have gained a lot of attention in the unlisted market, with retail investors also seeking to grab a slice. Now, how does trade in this unlisted shares take place? Is there a regulatory oversight to this as well? Alex and Hiral joining to talk about that. Alex, over to you first.
You said it. There's a lot of interest, and FOMO comes into play as well, because the price of NSE shares in the unlisted space have gone up quite significantly in the recent past. Purely because there is a feeling now that maybe, just maybe, that IPO may be around the corner. But why has this taken place? There are a few aspects that took place in March. One is that the board removed the restriction that required new investors to be vetted by the board. That's one aspect. The second is that there was a bonus share issue, and so the per share price of NSE has dropped, made it more affordable, as a result of which the number of shareholders in NSE has gone up very dramatically. So both those aspects come into play. But let's talk about the broader issue of investing in unlisted space. Traditionally, you've had only large investors get a slice of unlisted companies, and also through the AIF route, the Alternative Investment Fund route, which invests in unlisted companies. To a certain extent also PMS, but they have restrictions on how much they can invest. But now, more so now in the recent past, you have a private network that has been created, and deals are taking place that are being facilitated by wealth managers as well as certain brokers. Now, what do you need to know about this? Beyond that, right? So how is this transaction done? You get in touch with your